Good morning, everyone. What's going on there? 1 second. Huh. There we go. Tips touching. Close. Kind of doing an apart kind of thing there. But, like touching. Let me get the Discord audio up 1 second. Cool. There we go. Good morning, everyone. Ding ding. GME opening volume is non-existent. Let them dock then? That's not how that works. However, the spy's off to a really good start. When triple leverage Jimmy Bull ETF? I don't know, but as soon as we get one, I'm going ham on it. All right. Make sure. Did I update that? Yeah, I did. Okay. When was the last time I had grape juice? I don't know. Probably when I was like, you mean wine? Morning, everyone. Was told to come here to find out when moon. God damn. I'm ready to be Elon rich. Let me be Elon rich, bro. Understood. Do we know the rate hike? Not yet. Not till 2 o'clock when it's released. I want to know your opinion on EDR. They own UFC and stuff. I'll have to look into it later, Sage. Are they like going public or something? Or are they already public? I don't even want to look, but I'll do it. I mean, it looks kind of good. Some accumulation going on there. Could be worse. You're still carrying docu calls? You know it. Well, M's off to an interesting start. M needs to break 17 for it to start moving. And the DD you mentioned around 75 or 100, what are those numbers referring to? Basis points in the rate hike? If there's an Opex, what does that tell us? The game is over? Well, definitely that the game is less fun. What time is the Fed meeting today? The results of the report will be released at 2. No, not an Opex yet. Last day of settlement. What time do they have to settle Opex? They have to place the orders at market open. When those orders hit the exchange, nobody knows. At some point today. You know, it already is a fun one on SPX. Rev is not really an Opex play. Not really. We did want to see what would happen with it during Opex. Are they putting in limit orders? As long as the order is placed, then yes. They can put in limit orders. They put in the orders through dark pools. They can short the stock before the dark pools print, which makes covering slightly cheaper. What time of day did we start running on May Opex? It was pretty much right out of the gate, within the first hour. Thoughts about Rad's upcoming earnings? Last time we got spicy? I don't know, man. I don't play earnings. If no pecs, are you keeping your GME for cover calls? Yeah? Don't get me wrong, if we don't get an Opex out of this, I'm still gonna play more Opexes. Like, I'll still play October and November and December. You can only pack it so full before you have to dump it out. So if they had to place orders today, that means massive volume today, but no massive volume, then Opex is essentially dead. Any chance it got pushed a day or two somehow? There's some settlement for like Russell 1K and MSCI ETFs that extends further into the week, but today's the last day for S&P ETFs. And it's the last day for T+2. And FTD cycles, so have leaps and shares. I mean, no. I wouldn't buy leaps. Shares are fine. Are you worried about issuing CCs into a potential ETF rebalance? I didn't say I was selling covered calls today. If no positive price action today, what percentage of your 78K will you have lost? 87K. I'm up on most of it, like 30%. 28% right now. Buy more weeklies. Yeah, I could actually. If no positive price action today, will the oceans dry up? Will the meat logs go cold? Will the Dan stop reeing? I doubt it. Sava finna squirt. I don't really like playing the second day of Sava. I'm not gonna lie. It is finna squirt, but no price drop overnight. It's kind of bullish. It'll peak though, which is concerning. Holy fuck, IV is so high. Ah, fuck it. I'll mess with it. Fubo and M. Yeah, M's looking good. Daku's bouncing back. What's Fubo doing? Fubo looks good. And it's not doing a lot, but it looks good. SPX is still climbing 38.75. Why is Fubo so volatile? I don't really think it is. Did you see the NVIDIA 4090, 4080 presentation? Yeah, a little bit of it. Is it safe to assume that institutions who were short GME have left the stock and days of violent upside potential are over? No. That would be an unsafe assumption. I do think that they walked away for quite a long period after the leading into and after the split. But they're back. They're back and they're buying puts again. So if they did walk away, they came right back. Chat's bearish bi-weeklies. I did. I bought more. The amount of impatience and panic is straight up baffling to me. They bought weeklies, that's why. People writing weeklies into Opex are always panicky. If they had October calls, they'd be up like 30 something percent right now and wouldn't care. I learned my lessons from Freg's Day, and I'm in October 21s. Nice, man. However this Opex plays out, I won't lose money. I'm up on calls, and I have stop set. I'm chill as fuck. I'm looking forward to see how this day plays out. Trust the thesis, trust the play. Thanks, Lulu. When you walk away, I count the steps that you take. Do you see how much I need you right now? No? Unless they bought the October calls too early, then they're just breaking even. It depends on how early they bought them. If they bought them during the dip and bought them at like 25, 30, they're almost in the money. I have October calls and I'm not up 30%. I'm going to assume because you bought them like right now or yesterday. At some point you chased. Because Ivy is higher right now than it's been all week. So if you bought them before today, you should be up. You might not be up 30%, but you should be up a little bit. I know you don't like Beyond, but it's doing something. Man, I got enough stocks in the basket here for an army of degenerates. I don't need another one. And none of the COOs and the companies I'm invested in have tried to bite anybody's nose off. Former COO? Alright, fine. GME needs to break 28.50 and 30. Those are the key resistance levels. No, Sava, you bitch. Go back up. You haven't hit Gamma Max yet. What is Sava's Gamma Max? 46? Yeah, pretty close. Huh. Is that volume going up on GME? That's crazy. Don't do smug Gherk yet? I haven't. Relax. Sava has resistance at 40, around 40. High is only like 45-ish. Gamma Max is 46. Previous highs on Sava are way the fuck higher. Like in November, it hit like 100. Although I agree, Sava doesn't have that much more room to run. Ba, 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 ba. See, if GME makes a run today, are you gonna keep some tight stops at 2 o'clock? No. Huh. Paris, welcome to Dillionaire, man. Thank you so much.
Happy birthday, Gurk. Yeah.
Is it bullish or bearish? The SPY is climbing into the Fed announcement. I think we're seeing just like a lot of short side, like seller exhaustion on the SPY. It's gotten driven down too many times without like sufficient profit taking. So with the risk of the Fed meeting on the table, expect profits to get taken in advance as straddles are set up. Right now, straddles will probably skew the current gamma exposure on the SPX. Regardless of what happens today, every Opex event is an additional opportunity to learn how to play the next one better. Those with greed and patience will always be the ones first to cry foul and run. Thank you for your continued patience, Girk. No problem, Gilgamesh, King of Dans. Thanks for hanging out, man. When's October settlement? After the third Friday? Nice use of foul to call out the pigeon wells. Is this Moana? It doesn't matter, right? As long as some people think it is. Wouldn't full bull 30? Is Moulin a good price or is it one to avoid? It's a big piece of shit. My member anniversary question is melting. Mr. Fermented Cucumber, when would you see ETF in-kind obligations triggering some action on the price if it does? I mean, if it does over the next like today and the next couple days, as the rest of the indices ETFs are rebalanced. That's why, like, if there's not a lot of price action today, I'll probably sell off my weeklies, and then I'll still keep my like Octobers maybe for like another day or two. Was that Opex? No, but that was a test of 2850 where we got rejected. Volume is still very, very low. 442,000 right now. What's the line over the stocks on the right? Oh. The fuck? Hold on. I should fix it. Windman. I don't know. We'll see. If we can see GME break above 30, will the upward price action continue this week or be rug pulled once we reach GM? I mean, it could be rug pulled once we hit GM. It depends on how much volume we get. But yeah, if we break 30, it's very good for potentially moving up higher. The third Friday in October is the 21st. There's October 7th, 14th, and 21st, which is the expiration, which would give you a settlement period of 24th, 25th, and 26th. That was a fun Opex. I saw Jimmy blip up to 30 in after hours yesterday. Tested 28.99. Not 30. Has Rev even moved a penny? A couple pennies. It's down 6 cents on the day. AMD is ripping. Oh, cool. I have stuff on that. Hmm. Where's AMD? Oh, nice. Yeah, AMD's pushing up. Netflix failed the test. Microsoft still looks good. How's Tesla doing today? Down a little bit. Looks like QQQ might be. Yeah, QQQ's performing a little better. How's IWM doing? Where the fuck did it go? There we go. IWM looks okay too. SPX looks strong still. Is Sava dead for today? I mean, I'm done playing it. I don't like it when it falls off. Too much profit taking. Will you be holding your October M calls an extra day or two if we don't break 20 today or cut it loose? I'll probably hold those an extra day or two. They're pretty cheap. I mean, I don't care about them that much. What amount of volume would you consider a good amount? Sorry for the dumb question. I mean, we'd want a few million volume. At least. Like, ideally 5 to 10 or more. Do you know what Gamma Max is on Revlon? Yeah. Uh, $4.17. This is the first Opex where I'm not red because I bought calls at a better time with solid theta. Here's hoping we see some more volume and a good Fed rate reaction. Agreed. Critique of straddle day trades on SPXL, SPXS versus SPY. I mean, SPY's probably easier to manage. It'll perform better too. Is Fubo in the basket? It's getting in the basket. It used to be, but then it kind of had a fairly long period of just sustained shorting. So we'll see. We'll see if it picks back up. Did you say you'd not be setting tight stops before the meeting? Yeah, I'm not. I'm not setting any tight stops on any of my like Opex positions before the meeting. Just because like the initial reaction to the meeting can be really volatile. And I don't want to get stopped out and then the market rips. Are you cutting upstart calls if it doesn't do anything today for Opex? Maybe. I have to think about upstart. I have CSPs that are I have like 50 CSPs that are in the money on it right now. So I'm not cutting those. And it seems silly to cut my like call exposure before those get assigned. Yeah, I'm not having any problems with IBKR. Thanks for everything, Girk. I've learned so much since I've been here. Bobby, Rev, and Fuvo have all rocketed my portfolio. Using CCs and CSPs to compound my gains. Starting to feel like I'm making solid moves. Congratulations, CC Enjoyer. What would you consider a close stop on GME right now? Um, I don't know, 10% contract value? Are there any plays you initially thought were garbage that you later changed your mind on? If so, what caused you to change your mind? Also, smash the like button. 1,700 watching and only 450 likes. Oh, if you guys could, that'd be awesome. Revlon? I didn't really like Revlon initially until the second FTD report came out. And once I started to see like higher fail to volume ratios, it got very enticing and I dug deeper into it. Cat and V both look really good. Like the setup's really good for them. Nope, still bullish on Rev. Two o'clock. Jesus fuck. All right, hold on. Daily Nopex question count 114. If you keep that up all day, Mike sells CCs, that would be amazing. I know you're bullish on Revlon, but is this extreme low volume an issue for compounding fails? Yeah, of course. It's not going to fail at as high a rate if the volume's low. Do you draw a line on the chart to make GME go up? I don't think I need to. It looks like it's going to do it all on its own. Does AMD ever get to its GM on runs historically? Yeah. It's definitely, I think it's definitely crossed GM in the past. Not often, but it did it did at the end of the March run, and it also crossed GM in like Feb 8th and 9th. Feb 2nd, 8th and 9th. It crossed GM. Let the poor's YOLO question. Let's get the poor's YOLO questions out of the way. Win Nopex. What should I do with my 50% out of the money weeklies on the meme basket? Why crime? I used my mortgage money to buy weeklies. What do? Thanks, Duxton. How much do you reckon you spent on transaction fees and on IBKR in your trading career? I don't know. My transaction fees on there are pretty low. And they're a write-off anyway, so who cares? No, I'm not getting a Fedora Sage. Thanks for asking, though. He forgot win next Opex. Yeah, that's true, too. Where do you think SPX is going before the minutes? I don't know. It's already up at like 38. It's getting really close to the 38, or like 389.5 level. I'd be surprised if it hit 3,900 before the meeting. What is the plural of Opex? Opexities. Is bull pendant? Oh, Jesus, fuck. Man, you guys really just want me to quit streaming, don't you? I mean, I know some of you really do, but the plural of Opex, Joe Pesky's. Carl wants to start his own stream, so he's using his alts to agitate Gurk. Carl would ban you all within like 2 days. He'd look at his chat and realize there was no one there because he'd banned them all. And then he would be happy. That way we can brush our beards together all day, and I can become the usurper I've always dreamed of being. One day, Carl. One day we can brush our beards together in our his and hers bathroom. Today's not that day, though. Oh, look, Jimmy going up, almost like you said 3 minutes ago. I may have made mention. I heard you were nominated for a position at the Federal Reserve. When does that start? Will you keep streaming? Yes. Ryan Cohen is the Opex and Omega. What's a good IV to buy into GME options for next Opex? Under 100 is nice. I heard Kenny is going to be treasurer if DeSantis wins. Thoughts? Cool. Who the fuck is DeSantis? It's a trap. If you touch beards with Carl... Wait, hold on. Carl timed you out. I need to know what he said. Some of your tea will transfer him. He's a tea vampire. Huh. Interesting. The Florida governor? What's he running for? He's likely to run for president in 2024. Isn't he a bit not moderate? Like, so the same reason, like, they wouldn't make, like, Sanders a candidate, right? Yeah, he's super radical. So, you're not really going to get candidates at extremes like that. They'd be too risky for the party. But when Trump ran, you know, his platform was fairly moderate, right? Like, obviously, like, extremism took over through the rest of his term as president. But he didn't run under that. You know, when he was running, people were still confused because he used to be a Democrat. Don't talk trash on my future president. I mean, it's a political strategy discussion. I don't think it's particularly biased in any way. I would have to have political viewpoints for that to be true. And I don't care. I mean, he's a little right of center. I think everyone can agree with that. Or do you guys think he's that DeSantis is a centrist? My time to shine. DeSantis is essentially a populist. He appeals to the far right, yet doesn't do most of the things they actually want. He's a true politician. He has no face, no real ideas of his own. He's simply a mouthpiece for the conservatives in the state. So a good old boy. The South is the best. No politics. You guys can't talk about politics. I can say whatever the fuck I want. It's my stream. Yeah, it's like the southern part of the Midwest. How long until you run for local government? The chances of that happening are very slim. I don't even know who that is, Tungsten. If we break 2850 with volume full bull, no, 30. I said 30. Nice try. Trying to sneak in full bull early. I wasn't criticizing DeSantis. I was saying that he is an unlikely Republican Party candidate because he's viewed as being a little off center. The parties, the Democrats and Republicans, like centrists because they can get votes from both sides. They don't like polarizing candidates. It's bad for fucking business, and the hedge funds that pay them don't like that. Get your shit together, all right? It's all about the money. If you think anyone has ideals or beliefs that is intelligent, you're incorrect. DeSantis is the reason Florida leads the country in COVID deaths, and he wants to exterminate everyone who isn't white, shishit, Christian. People don't stand out. You won't be spared either. Read First They Came again. Okay, well, that's an opinion. I'm such a centrist that I fill in my own bubble between the D's and the R's on the ballot. Keep talking politics is making the stock move. How are we feeling for the last day of Opex? I mean, it's the last day for Opex. I don't like the current conversation. Can we just keep it about personal greed and money? That's what I thought we were talking about. Oh, I was criticizing. He's just fake, and if he gets elected as president, he will literally do whatever the moderate to further leaning right wants. Essentially, he's a conservative billionaire's wet dream in office. He will say whatever the party wants him to say. All billionaires are conservative. That's just like a given. Even if they're Democrats, they're fiscally conservative, right? They don't want to stop being billionaires. Imagine being a billionaire and then not being a billionaire anymore. Their egos couldn't take the blow. I identify as a billionaire. I'm trying to do some other work. This is rude. I'm sorry, Fluffy. They give away all their money after they're dead. That just means they didn't like their children. Then they're stupid. Would you mind swapping Upstart for Docu? Thanks. Yeah, we could do that. Ooh, that's way more exciting. Oh, maybe I won't get assigned on my fucking CSPs. That'd be a great end of the week. Who the fuck just asked a stock question? Ban him. If the Fed comes in at 0.75, this market is gonna VUP. Probably. Hello viewers, my name is Giuseppe Xerxes Johnson, and I would like to inform you about a political candidate that we can all get behind, and will also get behind us for the right price. We can't trust one man to run the country, but we can trust a hive mind. Vote Dan in 2024. I'm in. You sold me. It didn't take a lot, but I'll do it. Any beauty tips for dealing with back acne worse than face acne? No, I don't. I don't have back knee. Put a towel down at the gym. This already is an ascending triangle. Up squat. Yeah. Do you have any strategies for playing 0DT SPX post meeting? I already have a straddle in place. Well, I guess it's a strangle. I have 3900, 3850. for next Friday expiration. I was rereading Intelligent Investor in the hot tub last night, as one does. Came across the word super stock in chapter 14, immediately closed the book. J-Pow in the mirror right now saying Volker, 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 Volker. He's just warming up his tongue for Christine Lagarde. You're gonna hold your GME weeklies through 2 o'clock? You fucking know it. Fun fact, I actually do want to run for political office IRL. Would you vote for me? No. J-Pow eats ascot. I don't vote at all because I don't want to have a biased interpretation of political sentiment. I just want to see where the masses take it. And then whatever they decide on, I know I have a better understanding of how the market will react. What up, all you pickle ticklers? It's your boy, Gurk, here with another Dopex. Smash that like button. Hashtag Moongang. Fuck you, not sure. I can't believe Carl timed me out. It's an honor. I'd like to thank everyone who made it possible. Thank you, Carl. Nice. Yeah, I don't want to skew the vote with my own, right? Can you tell us your mother's maiden name or the name of your pet as a child? I will answer one of those. Sebastian Longsbottom. But I'm not going to tell you which one of those I answered. Good luck getting into my brokerage account now. I love how people in chat are like warning me about it being like a phishing scam. It's like, Girk, don't fall for it. Because people in real life ask you your mother's maiden name all the time, right? I mean, that's what I always ask people that I want to make friends with or I just meet. I reserve my dislikes for John Lithgow from Third Rock from the Sun Tips. If I'm displeased, I remove the dislikes. I see. GME Finna Squart? A little bit. Are they getting ready to flip the hedge? No. Rejection. So close. Upscore chain is stacked. I know. Why did everyone start saying squart and why does it sound so gross? I think because it sounds gross. I know you said you're holding till the end of the day, but surely you have a target or exit strategy that might mean you sell before. Of course I do. I am tired, but I'm always tired, Nicolare. Could they have made sure orders don't hit the ticker till after 2? Yeah, they can do that. It's expensive. It's hard to internalize that much volume. If they're internalizing it. You don't need an exit strategy when risk tolerance is 100%. I mean, my entire weekly GME position is like 8 grand. I really don't like for the weeklies. I really don't give a fuck if I lose it. Which word to remove from existence? Squart or moist? I love both of those words. I would prefer to keep them. I don't even have 8 grand. Fair. Think about it this way though, like, okay, the word moist, gross, but moist things, amazing. Moist cake? Would you want a dry cake? How would you describe your cake if not moist? What synonym would you use? Misty? Humid? See, all of the synonyms are worse. Muggy, clammy, dank. Dank's not bad, but no one's gonna understand what you mean, right? They're just gonna assume you mean you had a good cake. Juicy? that none of the there's no way to describe something. Okay, there's a couple things you can never do in life. You can never describe something that is moist in a way that doesn't sound gross. Okay? And you can never smell your fingers in public. There's never a good story behind someone smelling their fingers in public. You want me to draw a line on GME? All right, I got you. There's critical margin. Boom. Can Rev recover from this drop? I think it'll be okay. I had a medium rare. Oh, you could say your cake was medium rare. I don't hate that. Can you do some TA on Ape? I think you're on the wrong stream. Well, hopefully we immediately fail this. But I have a feeling the spy's gonna bounce again. Okay, the second one is totally true. It's completely socially acceptable to rub your fingers under a friend you've known since before you became an adult's nose at a bar. And that's acceptable and a fun goof. Sure it is, man. I'm not gonna lie, I've never had a positive thought when I've seen another guy go up to someone else with his fingers and be like, yeah, smell that. New lavender lotion? What do you think? Ooh, water infused cake? I mean, they are water infused, right? What if you have bergamot, honeysuckle, and lime on your fingers? Okay. Fuck you, Squamsk. That's not cool. You can't just come at me with that. You don't tell them to smell it. You walk up behind them and then put it under their nose. You can only do it after many, many drinks. It's the rules of the world. No. You don't do that. What are you, 14? Political parties can't do anything about the stock market. The government doesn't move that fast. Why does everyone spend all their time talking about the midterm elections and the stock market? They're not interconnected. Market bad, people sad. But given the number of market participants in the general public, It doesn't affect votes at all. It does affect donations. Does my finger smell like mayo? Have you been dipping it in mayonnaise? How much does Ivy need to drop for you to be concerned? It hasn't dropped much. It's up on the day. Best case scenario from the Fed at 2 p.m. Bullish projection with a 75 rate hike. If there was a huge rate hike, 3 to 5%, would you just sell deep in the money covered calls for Jimmy? Yep. I'd probably do that on all of my stocks. So about 800 SPX, 3900 0 DTEs at 2236 each. Just now, that makes me feel inadequate. It's just called margin. What long-term holdings do you have except Fubo and GME? I have a bunch of shit. I have AMD, O, Tesla, I'm out of Amazon. I have Campbell Soup, I have Google, I have Palantir, I have SCHD, I have Alexander's, I'm about to have a bunch of Upstart. What else? I don't have any Tootsie Roll. You called it at the start of the day. It's 2850 and we're stuck here for now. Can you uncall that? No. To be fair, there's not a lot of downward price pressure from active funds right now, but they have some internalization to offload, so What is O? Realty Income Corp? It's a REIT. What are the best dividend stocks in your opinion? Ones that grow? I'm not a big fan of dividend stocks. I own a few, but mostly just to like have backup income. Still short the Nikkei? You fucking know it. Long yen. Long yen, short Nikkei. I think I can carry the position through June of next year. It's not too big. Long yen was my adult film stage name. How do you learn what position size to use when scalping? You should paper trade, but generally you need to use smaller ones. You get too much slippage when it gets too big. When did this become a fishing stream? Hello, my fellow fishermen. Today we're going to catch the most rascally of fish, the gherkin. The tools to catch this ornery beast are potted plants, asking about Opex, and security questions. So, Gherk. Ugh. What's your high school mascot? I don't know if we had one. Like, I'm not kidding. I'm really not sure if we had one. Did you Guybrush last night? A little bit, yeah. Go back to admission and tell them you've been unemployed for the last 6 years and want a refund. Cycles dead because of the split, or split dead because of the cycles? That's fucking deep, Noah. How about neither? I dare you to adjust the triangle. Oh no. Like that? It's AMD. Is AMD doing bullish things still too? Where did it go? I have too many fucking stocks on this list. Ooh. Look at that shit. I like it. What makes you think the SPX is gonna bounce? Oh, because technical analysis is not reliable. Technical analysis is good for finding entries and tracking trends, but long term, it is not reliable for determining the direction of a security, especially when you're dealing with the market. You need to understand technical analysis's limitations. It has many. Ooh, gross. Shorted. We're going for the long one here. This is Elliott wave. I can't uncall 2850. I already called it, S-Rule. Look, we have Jan, Feb, June. Now we're waiting for August. Then we get August, right? And in November. It's the algos, guys. They're telling us the future. The god algo is leading us to the promised land. Halting to close isn't ruled out. They've done that before. Really hard to pull off, but it's not ruled out. Explain these stocks like I'm French Canadian. I don't. How does one do that? Do the French Canadians have a different? You know, it's like you have a bunch of beaver pelts, and you go and see if anyone else wants to buy your beaver pelts. And, you know, if there aren't a lot of other beaver pelts for sale, maybe you charge more for your beaver pelt. Sometimes you haven't gotten the beaver pelt yet, but you want to sell somebody the right to buy your beaver pelt. Fuck off my beaver pelts.
Mais même comme des actions.
It's like 2850 is the event horizon, but once we get through, it's just Kenny and Carl having a staring contest while pooping. Yeah, pretty much. What was that? French? I'll play it again.
Mais même comme des actions.
Quoi? French for what? Are puts same like shares? But they want it to rocket. They're god damn it. It's like no matter how many times I explain it, so many people revert back to that mindset that hedgies are getting fucked. Opex is beneficial for them. Not us. Them. We're along for the ride. We're doing the things they do. But they're the ones making all the money off of it. God, that mindset that like hedgies are getting fucked is so pervasive and massively incorrect. I have another question. Please answer. I really need to know this. What is an Opex? Options expiration? What's the deeper meaning of GME volume being in record lows this week? GME is very, very illiquid right now, which can be realized by watching the bid-ask spread throughout the day. Is the price sticking to 28.50 indicative of unreleased pressure? We're very close to the flip point in the hedge. So that's why our price action into 28.50 accelerates, and then our price action at 28.50 is rejected. If we break 28.50 and the market maker hedge flips, we'll see a lot of buying in order to rehedge the chain. What's the prediction for the BPS hike today? 0.75 and a SPY rally? I don't know if the SPY will rally, but I assume 0.75. Everyone's assuming 0.75. The contrarian, don't bring up the fucking demand, all right? Jesus fucking Christ. You just play the opposite of market sentiment. I mean, the market sentiment is stacked to the put side. I think it's better that you understand the market sentiment than to try to be a contrarian all the time. I tried to explain this to you yesterday. Taking everything as bearish is not going to make you a lot of money. You need to be more flexible in your thought, like the way you analyze market positioning. Everyone has shitloads of puts right now. Most institutions will be straddled fully by 2 o'clock. You know, a lot of Wyckoff's theories were written in a time when most positions taken were either long or short. Nowadays, most positions taken are neutral. GME back to VWAP. Ugh, boring. Well, we're not getting volume in the midday. Upstart's still holding too. Decent support at 28. It'll depend what the market does here. The market could stabilize here at like 38.72. What happens when a stock is halted into close? It delays the requirements to settle the obligations till the next morning, which is what we saw in GME in February 2021. Like February Opex 2021. Believe me, if they're so desperate as to halt the stock into close, we're all going to make a lot of money this week. Can you describe the effect? Sorry, what's this? I just lost the question. Where did the question go? I was just reading one and I can't find it now. Can you explain the importance of the yield curve and its effect on equities? There's, I mean, let me try to think of how to put this. Like, do you want to know how yield slope affects equities? Or do you want to know why the yield curve flipping is important? Because steeper yield slopes have significantly positive effects on stocks, regardless of market capitalization. But it's not positive for the labor market. And then like a yield curve inverts when the long-term interest rates drop below short-term rates, indicating that investors are moving money away from short-term bonds and into long-term ones. So that's why the 2-year yield is so important, because those are the short-term bonds. There aren't a lot of instances of yield curve inversion throughout US history. There's a few, but not a lot. Usually protracted inversions of the yield curve will precede a recession. Woo! Back under 28. Awesome. With some volume, too. So as a relatively new guy to these Opex runs, what's going to happen if we have another NoPex run? What do you expect to happen this week? Up, downs, or flat? I mean, if we don't get a rally in the market, then probably fairly flat. I mean, we just came down with the market a little bit, and they shorted into it when we broke VWAP. Deep in the money put volume all over the place. Yeah. That's usually how they short it. They're not going to be able to delist Rev with the current volume. It's not below the threshold requirements. Or the, like, NYSE volume threshold requirements. Where's VWAP? I can't see your screen. 2814. I thought the presence of deep in the money puts is a signal that covering was over. Unless covering hasn't begun. There's also deep in the money puts all the way up until covering begins. Then they're pulled, and then they come back. Oh man, you gotta really stop. Daily Nopex question count 154. Yep. Is there still evidence of an entropy swap? After the split, it's a little hard to determine the hedging values. Also, you know, the chain's not as liquid as it was. There's a lot of out of the money puts, or sorry, super deep in the money puts. So there's a chance there's one in place, but it'd be hard for us to determine if it's actually there or not. Like, I don't think the results would be indicative. I don't go to the cinema. I have a television and internet. Why the fuck would I go to a movie theater? So I can sit in other people's filth and eat popcorn? I didn't time out Bob. Did you notice Upstart started running right after I asked you about those calls? No. 2750 Canadian? What's that in real money? Ooh. Bob retracted his own message? Yeah. Nope, just net negative gamma market makers. They sell into the drops, they buy into the rise. It creates volatility. It's about to get mega depressing in here. Always. Wouldn't we see at least some of the baskets running a bit this week if we were going to see an Opex? Sava ran. Fossil ran. Upstart's still kind of running. Well, haven't Pores discovered the short leg of calls? They can just sell on the run-ups and buy back on the inevitable intraday downs and turn their frowns upside down. They're afraid, usually. Is Upstart gonna rip if it crosses 25? There's a lot of call OI. Why don't Opex orders always arrive on the market at the same time of day? Because they use different dark pools and they have different settlement periods. Pores in here are all sad about a $1 drop in GME. Meanwhile, I'm diamond handing rig for a run up I'm expecting in the winter. It's down 50% from its peak in May. Jesus. You have like a lot of it too, right? No, not all dark pools are same day settlement. Foreign dark pools can settle 24 to 48 hours later, although they generally don't transact a lot of volume through foreign dark pools. Yep, Octobers are still green. Or, well, most of them are. I'm sure people have bought some that aren't. What's the date for Revly delisting or Moon? October 13th? Has Dix risen? It was up this morning. Yeah, it's up 77 basis points right now. Pushing 111. Bonds are down. All the indices are slightly up. Like the 5-year T-notes are down. But even those look like they're going to pull back a little bit. Fucking way down. It's TLT having another shit day. Actually bounced a little bit. Interesting. Starry at basket stock. I feel like I remember people talking about it last year. You may dodge those upstart CSPs. Fingers crossed. If I do dodge the upstart CSPs, I got a shitload of calls for free. Is GME super low volume suspicious in the context of Opex or a nothing burger really? I mean, available liquidity on GME right now is very, very low. I'm surprised actually we haven't seen the borrow rate rising already. And we have a little bit into the end of last week. We dropped to 9 and then moved up a couple points. If we run hard, I expect the borrow rate will spike. Price targets for Upstart, they're in the DD, in the driver. They're in the Billionaires DD. I need to learn how to sharpen scissors. Could you explain like I'm 5 on a CSP? What do you want to know about it? You sell a put. It's secured with cash. You agree to buy shares of the underlying at the strike. If the price of the equity is below the strike at expiration, you receive a premium for the contract. Don't touch the mating surfaces. Interesting. It's the angle that's weird. It's so steep. It's like... It's like 45, like... now, like 30 degrees? Quit touching your mating service on stream. Oh, man. What would waiting on guaranteed volatility from the Fed meeting give them a chance to cancel out price action due to internalization and being negative gamma? To some extent, but the repositioning of the hedge will still drive a lot of volume. Has anyone from Superstock ever exercised one of your calls out of the money? No. I've never had any GME shares called away. At least not yet. I've gotten assigned on CSPs, but I've never had my shares called away. If we don't run today, what price action do you expect on GME for the next couple weeks? I mean, that'll depend on what the market does. Like over the next 2 weeks, we're mostly influenced by what the market's doing. Up until we start to hit like early October FTDs, which may be a little offset this month actually and fall closer to the end of September because most of the volume in August that was realized on the 16th. Tempted to load more here, but I would love it to get back to 0.65. Too optimistic? I don't know. I bought some at 9.5. I don't have an order set for 8.5, but I have one set for 0.75. If it hits 50, I'll double down on them. What's your strike on the upstart CSPs? 27.50. I can buy them back. I don't need to buy the shares, but I'd probably want to so I could offset the loss. I want to mainly sell CCs at the peak. I mean, of course. That's the best. Yeah, upstart looks really good. Yeah, Upstart and Macy's both moving up to their kind of gamma flip points right now also. We'll see if Jimmy pulls up too. Jimmy will probably need a little bit of volume. Upstart has a nice borrow fee. It's on Reg Show also. I know you've been wondering what's been going on with my Upstart 2-share YOLO. I'm crushing it. Congratulations. Guys, MOASS is real. I swear. Come on, seriously. I think I need more coffee today. If this is a NoPex, would you say that out of all the NoPexes, this one seemed the most promising? It definitely did, yeah. Just espresso. 6'3" tarnished Dan of Mount Danmere. Do you have any positions on M right now? I have like 30 $20 calls for October. Honestly, M on longer time frames doesn't look great. It doesn't look that bad. Actually, it looks quite good. It's like in a descending wedge and it hit resistance at 16.14. Like M's in like a perfect double bottom setup. So I don't know if I agree with that. Like how far out are you going? Like the weekly? Like the weekly probably doesn't look great. Although the weekly doesn't even look that bad either. It looks like it broke up from its downtrend and found a higher low. I will say volume on it kind of sucks right now, but yeah, I don't think it looks bad. Cheers, teaspoon. Yeah, Dixie hit one. I know it hit 111 today. It's fucking crazy how high it's going. I can't wait to short the fuck out of everything into Q3 and Q4. Unsustainable ratios. Yeah, sure. Lee. I'd go further. Well, depending on how far out of the money you're gonna go, but like there's a part of me that just wants to full port YOLO. Like sell everything I own and full port YOLO into like SPY or SPX like 3250 puts for next June. And then I can just wake up every morning, see if the market's dropping, and if it's not, I can go back to bed. Do it. I'm not gonna do that. I just did it. There's better ways to do it. It's I mean, for a market crash, VIX positions are really good to have. Because I use VIX to hedge my long positions. I guess I'm kind of always prepared for a market crash. But it's you could time it better. You don't need to just like buy an obscene number of far out of the money puts for like months and months in advance of anything happening. It's too soon, but it's getting close. Yeah, UVXY is kind of ridiculously cheap. It's super over short. I mean, you'd probably want calls on VIX over, like, VXX. Short futures or stock? Yeah, short futures is good too. I would probably have some mix of both. Like, position for a slow grind down. I mean, options are fine as long as you're not super far out of the money, right, Segan? If it's going to grind down slowly over months. Like, if you're buying leaps 10%, 20% below current prices. Especially if we get a bounce back above 4,000. Like, I'd be, like, if we retested 420, I'd be perfectly okay with buying 4,000 put leaps. Short dated options are definitely not the way to play it, but I would want some VIX exposure for if volatility did pick up. Little G-Wagon, welcome to Dillionaire, man. Thank you so much. Hit me up on the Discord. I'll get you added after the stream, man.
Yeah. Yeah, we might have a chance, but we ain't got roles. Give us more than a chance, cause we ain't no cold. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies, while I'm selling CCs like another fucking moon win. Praise be to RC and the BY, please, cause I need GME.
What price do you see the SPY moving up to if it goes up? I mean, that'll depend on call positioning. Especially intraday today. Right now, 405, 406 seems like kind of the limit. But that can change really, really fast. I can't even buy one June SPY 325. How much are they? June 16th. What's... They're 10 grand each. Yeah, they're not crazy expensive. Upstart Real MOASS? It's got a lot of potential. We'll see what happens with it. SPX and VIX does not populate on Schwab for me. You don't need, I don't think you need higher level options. I think you just need to put in the right ticker. It might be like SPXW on Schwab. I haven't traded on Schwab in a long time. I can't remember the ticker. Are you looking at 2023 or 2024? I think I was looking at 2023, right? Yeah, June 2023. Ooh. Intraday cup and handle. Can you help me understand who would be shorting us when Opex needs money for the hedges? The market maker? $1K for a contract, not 10K. No, they're 10K. Yeah, last was 109.45 times 100. It's like $10,900 on SPY. Ew. SPX better than SPY. I'm gonna see how many of those I could buy right now. I could buy more if I do a spread. Let's see. So if I do a bear put spread on a drop to 30.50, I make 20 grand a contract, 25 grand with a max loss of 16,000. Net debit 16,000 per position. Actually, that's better, but it has to fall further. Let's see if I do like 3,400, 33.25. The profit sucks though. Ooh, I like that. So 3,500, 33.25. And it's really got to fucking drop for that to print though. Let's see, 3,000 per. Interesting. What's happening? Oh, the spy failed to break up. This is more similar to Opex. Weren't we running by now? Yeah. Yeah, we were. Hmm. Ooh. Synthetic short combo. Infinite loss potential, though. Feeling this volume is going to be another record low for GME. Possible. We'll see. If we break 2850 and 30, we'll have higher volume. No, day's not over. Just because it's not the same as May doesn't mean anything. I don't think people understand the importance of the Fed meeting today. You can't trade swaps without an ISDA. Ugh. I think you may have answered this already, but I'm regarded. Did you guys ever figure out whatever happened to all those fat June obligations? No? I mean, likely some of them were covered in June, right? We did run up. I think everyone, nobody remembers the 20% increases. They're still relevant. But yeah, we went up like 20% in June, a little more than 20%, I think. So there's, some of it was covered. It's just that we never got any additional volume on top of it. The Fed meeting today is a highly predictable, volatile event. High predictability, volatile event. Well, the volatility is predictable. The price direction and conclusions are not. If the Fed goes 100 BPS, they could probably cover without even running the stock. Yeah, maybe. We need a big sell-off, but I don't think we'll see the Fed do 100 BPS. And normally I'm more hawkish. This one just doesn't seem. Although if I get it right and it is 75, that'll be 4 in a row that I nailed. Yeah, 100 BPS would fuck themselves pretty hard. They're definitely not going to do a rate decrease. The Fed rate hikes. If they pulled back rates, Jimmy would go higher than 42. Everything would go up super fucking hard. You'd have like a market-wide short sell-off. Any chance GME Opex gets settled T+3? Sure. I mean, the ETFs can get settled T+3. But options obligations can't. There's less than 0 chance they reduce rates. It's utter nonsense. It is. If we see 50 basis points, it's going to run really, really fucking hard. I don't think there's any way we see 50 BPS. This Fed has spent the last 2 weeks saying 75 or 100. Rev is doing a very slightly interesting thing. I like that. Oh. Jesus Christ. The fucking volume is so low. 100K today? I think bullishly, mostly just because there's so much seller exhaustion already. I don't think a 75 rate hike is bullish, even in the like short term, like next 60 days. A 75 BPS hike is not bullish, but I think the initial reaction to it will be upside moves. First of all, it removes the fear of uncertainty, which is a big deal. Second of all, the puts in place on SPX, SPY, QQQ, all of that shit right now are, you know, kind of at their break point and already sliding back some profits. So they may hold them into the meeting, but they're unlikely to hold them after. The put positions are so exhausted at this point that I wouldn't be surprised if we saw a rally off of 100 BPS hike initially, just so they could reposition. Nice. Kirk's ice cream sandwich. After reading GME Weekly's 30C as a strategic investment, I'm now full ported into them. Oh, the effects of these rate hikes aren't priced into the market at all. They will be, but not yet. Most of them don't have a lot of time left to expiration. A lot of put positions sold off last Friday, and we still haven't realized a lot of volume from that happening due to the repositioning on Monday. But, you know, a lot of them are shorter dated. The bigger put positions in October and stuff are mostly sold and straddles. And the range of the puts is like 3850, 3800 are like this, and those are starting to lose profits. Those further dated ones are starting to lose profits because the market has risen back up above those levels. So they printed really hard on the drop, but now their theta is decaying and they're out of the money. They won't hold on to those likely for much longer. And when they sell them all off, we're going to move up really fucking hard. It's, you know, so the gamma will flip and you're talking billions of dollars per percentage point. Like 11 bill, it's like 11.8 billion per percentage point. De-hedging. Don't get me wrong, on a 100 BPS increase, they're just going to use that rally to reposition into farther dated puts again, and then we're going to have another big leg down. But it could take, you know, like a week or two for that reposition to finalize. Do you think that could set Rev off? Not really. Not enough exposure to, like, indices. It has some, but not a lot. I don't know if it needs a lot. Stop telling me I'm correct, Superman. I know when I'm correct. I mean, again, the market isn't going to crash unless we start seeing people taking profits. Like we need to see big banks taking profits from their core positions. So we're going to need to see, you know, reduced margins and reduced expectations from companies like Apple, Microsoft, Google, Amazon, right? And when they start to downgrade future earnings potential, which they will soon because these rate hikes are piling up, then you're going to start to see primes sell off, right? And when we see primes sell off of their positions during big earnings periods, then we can start to see fear pick up in the market, and then you can see maybe a crash. What do they buy? Commodities. Gold. Not fucking Bitcoin. Wheat is a commodity. I mean, you guys need to look at like the longer time scale, right? We just had a fucking crash. Banks bought, you know, shitloads of stocks in this range. They're still up. Like there's no risk for them right now to hold. They're not buying more, but they're not selling. It wasn't a fake crash. It was a crash. Ko-Fi? No, you're wrong. Decrease in rates. Stocks skyrocket. Bears get fucked. J-Pow ascends into VWAP's embrace. Ascot Mommy creams herself. And Dan's re. Are you coming out of retirement for this? Here's the deal, Gurks BMG. If they decrease rates, you have to come out of retirement. So the current bag holders are people's retirement funds, always. You mean the hedge fund piggy bank? Are you streaming future federal prisoner Powell? I don't know. It'll depend. The market's gonna react to the minutes, like everything being released, right? They don't give a fuck about him talking. Copium before a rug pull? Always. Jay's Powell speech drafted by Primes will be handed to him 10 minutes before live. 2 p.m. All the information comes out at 2 p.m. I mean, repositioning will be a lot faster on 100 BPS than it will on 75. I've made this. I'm really bored, so I'm doing arts and crafts. Thanks. All right, we've stepped it up a notch. Boom. When empty. Today's a strange mix of sadness and hopium. Yeah, all the negative Nellies are being negative, and all the overly positive people are being overly positive. It's best that you just ignore shit other people say. They're usually wrong. One sheet of paper, 4 sides, 7 holes. It's as if he's trying to tell us something. Never. I should have started today's stream at 2 p.m. Or like 1:50. If we run after the announcement, I'll have been right. I mean, one of your like 75 different predictions. What's Jimmy's volume? And if no Opex, is illiquidity likely to cause GameStop to issue more shares? They're not going to issue shares because they're illiquid. They're going to issue shares because they need money. Before you start after 2 p.m., we run before that. People will say it's MOASS because you're not streaming. True. I thought about it today. I thought about it when I started the stream. I was like, I'm just not going to show up until 2. I'm still thinking about leaving for 2 hours and then coming back. But I'll come back and everyone will be like, I didn't know what to do. I sold everything. Sanjeet was here yesterday. I'm not going to chug twice. If I'm chugging all at once. You don't be a bitch. Am I doing red wine? I don't see why me being right and you being wrong means I have to do a thing. Like only you have to do the thing. That's not how bets work. Stop trying to straddle me. Did the SPX put leap thing? Then we can all watch the stream quietly for hours, hoping to see your daily emergence. The Dans will handle your bedpan. I don't even have to get out of bed. I'm considering hedging my Opex calls. How do you personally determine which puts to buy to hedge? My gut is saying at the money weekly puts, close everything out at end of day. End of day is flat. Thoughts? I guess you could. I mean, yeah, it works. You have to link your YouTube and your Discord accounts, Paris. The instructions are in the announcement channel under pins. When will the SEC start investigating you? They did. That already happened. I got reported a shitload back when I was on Super Stonk. It's almost like saying your opinions about stocks and options while not directly managing anybody's position does not make you a fiduciary or culpable for what they do with their fucking money. Crazy, right? Otherwise, things like Motley Fool and Jim Cramer couldn't exist. And DFB would be in fucking jail. Just a shill. Yep. SEC lost interest when they discovered there was no OnlyFans account. Thanks, Mo Money. So if no picks again, can we short the housing market? Do you think anybody will let us sell their house at the top and then pay them back at the bottom? I'm just an ideas guy, but your ideas are terrible. I mean, jail is a little harsh. I mean, don't act like if they couldn't, they wouldn't have prosecuted you to the fullest extent of the law. You should make the stream members only, but you wouldn't be allowed on it, Poker DJN. Anyway, you've got all that armored truck money now. You should be fine. I mean, windfall from your uncle. Did you use the same thumbnail as yesterday? No? It's a similar to the one from the day before, but it has a different title. Minute difference. We're seeing which title for the film pulls better with audiences. Sorry, Tanksimus. Have you talked to your accountant about first-time homeowner benefits? I will when I tell him that I've come into a home. That's how I want to say it. Looking to sell CSPs weekly. What are some important data points I want to make sure I'm looking at? Well, you probably want to wait till after the Fed meeting today. Rich people hate losing money. It's the worst, man. Why can't the Fed just have these meetings at 10 so we can get on with losing money? You know, I seriously don't know why they can't just fucking do it in the morning. I really don't. It's so fucking annoying having it at 2 o'clock. The Fed is so lazy. Why can't they get up before noon? Well, it takes a few hours for the Cialis to kick in. I know you don't want me to come out of retirement because my bull mayo is superior to the rest, but it's just not happening anymore. Listen, if they don't reduce rates, you have to come out of retirement. Well, it's on VIX in either case. I mean, VIX probably won't go up much on a rip. They'll just sell out of their spot, like SPX positions, and short the fuck out of the VIX. Give the banks and MMs time to front run everyone with early information. No, there's no leaks. It's the government. UVXY wasn't at 900. You're just seeing the effect of reverse splits on the price of the stock in the past. Florida or Boston? Boston. I'll come out of retirement if it's 0.75. Like literally anything different than 0.75. All right. What's the Nopex question count up to? I don't know. Mike sells CCs. What's going on with that, man? Where are we at? Daily Nopex question count 279. Fucking bot command. But if it's anything other than 0.75, you have to do a chug. All right. I'm in. I might have to go buy a bottle of wine. You know what? I could chug something harder. No, you'll get sick. No, I won't. I'll get blitzed. I'm not gonna get sick. This is giving me perm vibes. No, this one's free. MD 2020 and a 4 Loco. Ew. Do you just look in the mirror when you need expert advice? Yes. Ironically, the advice I give myself is terrible. I was like, I should start a stream and educate people on the stock market. Awful idea. When's the next Tinder date? It was Sunday. I was. I was full of hope and lofty goals. I was like, I'm going to teach these people in no time how to make money. Wrong. I'm glad we beat that shit out of you. Quickly. Very quickly. What is it scheduled this week or next? I mean, I live in New York City. You can go on Tinder anytime. It's really not hard. There's always like likes. It's like RRP, right? There's always liquidity in the market. Nopex bag holder looking to get filled with bull mayo. Full bull if M hit 17. I mean, bullish. CCI, I work there. Some insiders bought some shares recently. Looks like their rate of growth was a little disrupted over the last year, but they're doing pretty good. Decent earnings. Nice balance sheet. Liabilities are kind of shooting up, but raising rates will do that. Total operating expense about $1.25 billion. How's cash flow? Cash flow is decent. Down a little in 2021. Looks like they're starting to recover though. Yeah, not terrible. Probably decent. Slow growth, but growth. It's there. I mean, with Upstart nearing 13 days on threshold, any thoughts on next week's end of week's price action impact of that threshold? I mean, it'll depend on if it stays on threshold. That'll be a big part of it. The other really important effect will be if it runs really hard while on threshold, right? That's what we want to see. We want to see it run while it's on threshold. That's bullish as fuck, Bob. Right now, I mean, it hasn't had a lot of price action since it got put on threshold so far. A little bit, but a big run here, like a move up to like 35, 42. We could see something interesting happen. Because creating FTDs while on threshold not only increases, you know, the amount of FTDs, but it also is likely to keep it on threshold for longer. That, and it's got quite the gamma ramp, right? Up above like 30. There's quite a lot of out of the money calls since they've been a bit underpriced. No, I was talking about Upstart. Mm. They're aware of the shorting. Yeah, they are. They're not even a bad company. Like their financials look really good. And rising rates will probably be good for them over like the next year and a half. You good? Yeah. Penis? Nice, Cincinnati kid. GME's up, too. Docu just broke green. Macy's up 2% now. Ooh, really pushing on 17. Huh. Interesting. Somehow BBBY is still down. They also do not lend directly. They simply facilitate lending via AI to replace the FICO system to broaden lenders who are open to a different system. Yeah, but they get points on those loans that they facilitate, right? And so rising rates are good for them, especially when it comes to like credit cards and like auto loans. Credit cards, especially with their variable rates, right? And if we're heading for a recession, people are going to lean on credit a lot more, especially like the middle class and middle upper class. No pickle songs until we break 28.50. No full bull until we break 30. You guys get bullish too soon. You see like 4 green candles and you're like, oh, Opex is back on the table. We always just move with the SPY, Poker DGen. It's how much we move with the SPY. If we break 30, we move a lot more than the SPY. Right? It's a bear market. SPY has Opex too. By middle class, you mean currently rich people. Sort of. I never got my Billionaire song. Fine, Cody.
Happy birthday, Gurk. Yeah. Yeah, we might have a chance, but we ain't got ropes. Give us more than a chance, cause we ain't no coke. Get the cash in advance, cause we hold in the float. If you are what you eat, that makes gherkin the go. Hoping that you read the DD, cause when the shit squeeze, we go end up with the moon, man. Racks to the 510 weeklies while I'm selling CCs like another fucking moon wind. Praise be to RC and the BY, please, cause I need GME to move soon, man. Got the band GG on the CNBC saying that he ain't seeing no collusion. Yeah, we might be apes, but we ain't that joke. Motherfucker, trade, this is popcorn code. When the Citadel fails, I'm a bomber on boat. Sail the Elliott waves like a Kramer on coke. Yo, but we ain't no cult.
Breakout, breakout. Will Revlon stay at 650 for the rest of its existence? I mean, that would be kind of awesome if you could sell cover calls on it. What are your plans for October, Opex? To buy 30 DTE options and see what happens? Pretty sure IV would be terrible if it were stuck at 650 forever. Or I don't know about that. Not if every once in a while it goes up to 7 or down to 550. Our Opex is always the third Friday of the month? Yeah. You should answer the same thing we do every Opex, Pinky. Try to take over the world. I sold everything. I thought you weren't coming back. I understand. I recently learned that in McDonald's secret sauce, they had pickle juice to the ketchup mayo mixture. Mayo and pickles. Gherkin's been Mayo Man's secret sauce the whole time. I need answers. That's crazy. Ken Griffin hire me? For what? First off, I work for BlackRock, right? I thought that was the going narrative. How can you be sure that we're on the correct monthly OPEX cycle for GME since the split? We don't know. That's why we get exposure and find out. Kirk works for BlackRock and is sponsored by Kenny. This is all canon. Thank you, Fluffy. Calling my shot. Fed announces 7.5. Shorts push anyway. My puts go green. I take profit before 7 million volume Opex buys execute, and my call's 20x. In the name of almighty VWAP, I pronounce it so. Cool, man. Full bull or unsub? I'll see you later, Danorama. It was good having you around, man. It was a bluff. Oh, okay. Welcome back. If Upstart doesn't run this week, will you hold your October calls through next week? Yes. At what point do you start exiting Opex exposure? Not yet. Back to politics, please. I want to thank JFresh for all his outstanding contributions to the community. I wouldn't be the trader I am without your warrior trading videos. Thank you, JFresh, for your warrior trading content. Oh, that's actually funny. What do you think happens with 0.75 and hawkish Powell? Is 0.75 hawkish? I think we're living in different realities. I think you missed my members chat. I might have. Tips for making good tacos at home. What kind of tacos do you want to make, Jimbo Slice? Carnitas? Is that the lowest Vega neutral we've ever had for GME? No. Weird because of split adjustment? It's close. It's very close to like what we hit on January 18th, which was negative, or it was 575. Yeah, not negative, sorry, just 575. Today's 676. Really, really close to our lowest ever. To be fair, Vega neutral usually drops really, really hard before we run. VN was 2XX the other week. I asked about it. No, it wasn't. Who'd you ask? The most recent lows were 785 and 782. 875 and 782. What's your bullish GME scenario for the FOMC? Market rallies, GME moons. Welcome aboard, Paris. Hey, I would have given it to you on the fly a couple weeks ago. Yeah, I already know about the upstart FTDs, Bob. That's why it's a play. Well, partially. Also Opex. No FOMC poll today? I mean, sure, we could do one. I was trying to put an increase in ETF FTDs containing upstart since reg show inclusion. Yeah, I know. I also know about that. I mean that happens usually when any stock is put on reg show, especially if it's an illiquid one, right? Because they need to get the liquidity from somewhere, but they don't want to go through the process of getting pre-borrow agreements. I checked before. I have like a pretty big position on an upstart. VTI is tough. VTI always fails at a pretty high rate. You're probably better off not including it in your analysis. It's too all-encompassing, and the failure rate on it's generally kind of high. Honestly, if you wanna look for like liquidity correlations, it's better to look at the smaller ETFs. Because they'll turn to those when they run out of liquidity in the bigger ones, right? We're not a cult, Dr. Sharp. It's not a we're not a nautical themed cult. We're just not a cult. Yes, we are. Don't lie. No, you haven't missed a lot, Ben. Hey, we didn't drop with the market this time. That's cool. Is wheat still a play? Yeah. It's been going up a lot recently. Doing better. How can the ETF run out of liquidity if creation redemption can be infinite? It's only so much per day. And not all ETFs are just going to allow infinite creation within their fund. Like XRT does that shit, but not a lot of other ones do. That has more to do with each individual ETF's management. I'm going to wait till the Fed, like Vanguard ETFs tend to not allow that much creation. The problem with VTI is it's just got shares of everything in it. Literally. Baradactyl, you can't get money back that you didn't have in the first place. Yar, matey, we didn't drop with the market. Hoist the sail and straight onto Opex. Jesus Christ. If we're not a cult, why am I wearing a diaper and this ridiculous robe? I don't know. Is that what your wife laid out for you for the day? I can't vote. How are your Sava puts doing? I don't have any Sava puts. I never bought them. At what point today do you close your weeklies? Later. Maybe I'll keep them into expiration. I don't know yet. I would not fucking sell calls today. That's a big mistake. Greedy. Greedy, greedy, greedy. Are you straddling the SPY? SPX, but yeah. I have a straddle. So far, we've traded in between it all day, but it's there. Was the SPX like $18 at the money? 70? I have 3850s and 3900s, so they're a little cheaper, but it's technically a strangle. But a narrow one. Are you aware of a QQV volatility index or something like that? I currently read a paper how to improve Garch with intraday data, but I don't know what Arthur describes with QQV. I'm not sure. Is it like a data provider? Like QQV is, I think it's the volatility index for NASDAQ, right? Like it's the, not like VIX is S&P. I think QQV is NASDAQ's volatility index. Or like the NASDAQ 100 volatility index. Why is CC risky today if no packs? Who said there was no packs? So what it is you guys are getting a sense from me that I don't have a lot of confidence in a run today. But that makes you, that's making, in turn, making you overconfident that there won't be a run today. Don't do that. That's a trap. Still bullish on Revlon, yeah. Don't worry, lots of people sold all their calls before March, too. People sold CCs into May after I told them not to. Good luck. People getting eaten alive by Theta and freaking the fuck out. Yeah. Are you confident in a run? I'm not confident that there won't be one. Good luck is how traders say fuck you to one another. Yeah. I have a 9:30 expiry on the straddle. You could get it sooner, but I wanted the theta. I don't want to deal with any decay. Stop with the double negatives. Never. I will never not do that. Woo. Fuck you too, big fat dog. Thanks for being a billionaire, man. Dude, what are the tips doing, dork? Show me your tip. You know what? I'm just gonna go look at it. Oh, that's exciting. You see what I'm seeing here on the 15-minute? Bullish. I'm gonna send you a screenshot, Dork. So this on the 15. And then this. This. What in God's name are you two nerds talking about? Don't worry about it. Fucking stay in your lane. Right? That's what I thought. All right. Confirmed. Bullish. Nice order book there. Well, I'm looking at the SPX. There's an order book for GME. Drop it in the Billionaire General chat. Can I show them Dorky Poo? All right. GME liquidity is finna squart upward. It's like mustard's outpacing ketchup and relish. Well, mustard's downturning. Relish is about to get real liquid. And ketchup's, we're running out of ketchup. Almost out of ketchup. Ketchup's maxing out. Same like magic. Yeah. I don't like saying ketchup. I like catsup. Because it triggers people. And hot dogs. Cast and fact down. My grandpa from back east says wash instead of wash, or like wash your hands. Ugh. That's almost as bad as people who say like water or water instead of water. No, what? What? Rata? No one says that. Wada? That's New York. Wada. Yeah. They also say things like route uh, instead of root and radiator. Don't get me wrong, the New York, like the Bronx, Brooklyn, Long Island accent is also fucking terrible to listen to. That seems like a perfectly valid reason to break up a user. Every day he'd drop a use guys. Guises? Ugh. Chowda? Huh. Nobody says Tuesday. Who says that? That movie's amazing, B-Diz. Why do so many Americans say axe instead of ask? I don't know. As a Brit, I definitely say Tuesday. No. Tuesday. No. You definitely say Tuesday. Or well, you can. I guess it depends on what part of Britain. It's Tuesday, isn't it? Yeah, that's more like London, right? Like that's not like fucking gutter accent like Eliza Doolittle. It's Tuesday, ain't governor? You know, like that fucking that's awful. Don't talk like that. It's your fucking language. Have some respect for it. About to unsub. You guys can better yourselves. You don't have to be you don't have to be flower girls your entire life. You can move up in society. Cheeky little wanka. That's J Fresh. I just did great TAA on GME. After the May low, the amount of candles on the screen was the length of my fingertip. The daily candles have roughly reached the same length from this September low. Today is the day. Bullish. All right. I like it. There's no bias there. That seems like a repeatedly or a repeatable test and a valid experiment. Well done. Yeah, it's just science. Double blind study. Great results. Load it up on SPX 0DT 4000 Cs, just like you taught us. I bought a Straddle, Walford. Has anyone ever mistaken you for Matt Berry? No, I'm not old enough yet, or portly enough. Soon. I'm getting there. Oh shit. Poker DGen. There's only one right answer. It's the cosmic brownie, because we're going to the moon, right? Yeah, that was intense. Fuck. Because I was thinking oatmeal cream pie and squirting, but then I shifted direction. I've listened to you for over a year, and I don't know what a straddle or spread is. It's what you do when you shave your goats. I just did a lunch poll with 6 of my family members that have no clue about the rate today. Most of them picked 0.75 and a couple ones. Interesting. It can apply to servicing other people's goats as well. Do you frequently service other people's goats, a user? I need a trading dartboard. That fucking monkey could do it, so can I. Interesting. What if you put just like 6 stocks that'll run on the dartboard every time and then pick one of them? Are you trying to be me? I can't wait to write my book, Trading with Dartboards. New York Times bestseller as soon as they get the check. Stop repeating yourself, Superman. It's annoying. What if RC moves the dartboard? I don't know what to tell you. Meta and Google cutting staff. Is this a recession? Yeah. Hmm. Curious. "28 minutes, guys." Booth Hunter Pro. Great name. How are the tips intertwined? If we don't run, I'm making a video. Are you making a video if we do run? What if DFE just suddenly tweeted, "You guys are still in GME? Bag holders?" I mean, I would laugh my ass off. And then I'd buy more on the dip. Correction, you'd sell covered calls and buy more on the dip. Same thing. At this point, how much theta would be too much on SPX calls? I mean, you don't need a lot to straddle it, at least for if you're just playing today. If you're playing like a continued increase after today, like a higher target, like 39.50, you might want a few extra days of theta. Like if you think you're going to be out of the money for a little while. I'm pretty close to the money. I'm worried about the obvious lack of Nopex trolls in here. Oh no, they're here. They're absolutely here. Jesus Christ, Zakura, you've timed out so many people. What does Theta Gang even do all day? They set timers on their phones and they stare at it, right? Like the market opens and they set a, 7-hour timer on their phone and they just look at it until the day's over. I'll see what I have. 1 second. Yeah, right now I have vodka and like 3 different bottles of whiskey. So if I'm gonna chug wine, I'll have to get some. But I won't have to chug wine. You'll have to come out of retirement. What whiskey do you have? I have a Lagavulin 8-year. I have a bottle of Nika and a bottle of Hibiki. I don't have any bourbon. I don't really like bourbon that much. I probably have a bottle of JD somewhere that I give to people when they come over to my house. Eight-year? What are you, a pour? It's all they had. And the guy was like, no, you've got to try it. It's young. And I was like, oh, that sounds fancy. So I bought it. I have a bottle of Macallan 25, but I'm not fucking I'm not gonna chug that. Why not? It's a bit intense. It's like it's the sherry oak one. It's a bit much. I could do a bottle of Patron. It doesn't matter. I'm not gonna be wrong. That the rate hike won't be 0.75. By the way, the votes are in. DM Powell so he knows what we picked. Okay. Yeah, so if I'm right and it's 0.75, BMG has to become a Dan again. He has to come out of Dan retirement and perform at the dumpster. Um, if it's 1.0 or zero point 0.5, actually, if it's 0.5, well, less than 0.75, I have to do a chug. I don't care if he agreed to it or not. What would be your conservative ceiling and price targets for end of day? Our ceilings are at $28.50 and $30, and they are not made of glass. Patron's for the poors. Yeah, but I have a bottle of it, so. Wheat is moassing. No, it's not. It is up, though. It hit 9. Woo! If it's anything other than 0.75, you have to chug, and I lose all my self-respect I have earned to become a Dan again. Okay, fine. Don Julio Real. But I don't have a bottle of that. I just have a bottle of Patron Silver. Actually, it might not even be silver. Anejo? Silver. It's silver. It's definitely elevated for the FOMC minutes. $5.10 divided by 4 weekly gang rise. How many square feet is your apartment? It's supposed to be 1,000, but like the livable space is only like 800. Grease Nipples put their pickle in my jar. What happened, Grease Nipples? Do you remember the 21st night of September? The Fed was changing the rates at least 3/4 of a point while fucking the markets anyway. Yeah. I never disagreed that it would be anything other than 0.75. I thought 0.5 was much more possible than 100, considering that 100 could cause massive panic sells and squash the Fed's goal of a soft landing, especially the midterms coming up. Well, I know, you bluffed. Wonder what happened with your buddy in the house. He didn't pay me, so I have a house. We'll show the hike live without refreshing. I don't know. No, there's no mortgage. If we get 0.75, how do you see the SPY moving for the rest of the week? I think we'll see a big short side reposition. So move up into the end of the week, maybe into next week as well. Repositioning into October, probably November puts. You gonna translate JPOW for us? I mean, when the results come in. I might. I have to check it out though, Dwayne the Lone Johnson. I'll figure out what to do with it. So far, from what I've been told by my real estate buddies, the best way to handle the situation is to turn it into like an OnlyFans clubhouse with high speed internet. No, JC, you can't. Well, I don't know. Send me some of your content. We'll see. Just want the house out as Pickle House so that Smox has a place to make the only Cavs videos. Where is Smox? Isn't Morant's Rants living out of his van? He could probably use a place to stay. I don't know. Who? I wouldn't sell covered calls today at all, Paris. What's IV doing? Going up? The volume's picking up a little bit. Hmm. QDT, $28 Ps. Cost 70 cents. I mean, not terrible if you want to hedge the downside. What's up, bro, Brandy? Patient. Bullish or bearish on Google next 5 years? Bullish. I bought a bunch of it. Pretty cheap. Not that, like, right after the split. Well, right before the split, but Greg, if we cross 50, I'm telling everyone your name is Dustin, but it's not. Let us know when you sell your SPX puts. No. Fuck you, Carl. You're just trying to get me to time you out. I'm not gonna do it. I'm not gonna give you the satisfaction. Holy fuck, Revlon $6.60. Nope, thanks for not filling any of my .85 buy orders. Appreciate it. We all know Rev's going back to 655. You shut your mouth. Can we get a green song before the minutes? No, because I need Ben to message me. I've lost my chat thread with him. And I don't know where the song is. Two minutes. $30 seconds. Should I do a countdown? No. It's ridiculous. 10, 9, 8, something. 2, 1. Seven five. Woo! I don't have to chug shit. There we go. Put side printing. Top 3,800. Then we move right back up. I'm gonna put a stop in. Holy fuck. That rocketed. Was it? Relax. God. Isn't it cool how fast the market can move when there's actually volume? I'm down $100. I'm ruined. Those GME Octobers are still up. Just cup and handle, guys. Intraday cup and handle. Wait for the handle. That's how this works, right? Profit taking. There's no speech yet. Jimmy's still green. But today's awesome. What are you talking about? Come on. 30 more. You can do it. Holy fuck. No, I haven't closed my SPX puts yet. Just gonna move my stop more. We're here. No, 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 no. Ah, I got stopped out. 237%. That was pretty good. Now let's see if the long side prints. You should see the color of my port. Is it purple? No, I'm not going to use the profits to double down on the long side. It's not puts, it's a straddle kneels on tree. Censored again. What did you say? Now it's time for my calls. See, this is how it goes. It's so much fun. You guys should try it sometime. It's just like dismounting a horse, you know? That's why Elon's rich. Easy for a centaur to say. Who? King Charles? How did that go? I literally just declared bankruptcy. I don't think I can do it again. You can't. Unless it's a company, in which case you can do it over and over and over and over again. Till you get one right. That's why Elon's rich. Yeah, because of the horses, cry more. Ooh. Yen's moving up. Futures trading's going crazy. Ooh, bounce? Will the actual presser have any effect? Probably not. No, I still have the calls. Nope. It's also the wrong one. Need more images. Damn it. I can't find it. Oh well. I'm really glad I didn't strangle 3,800 right now. What are you talking about? GME is almost fully recovered. So you're getting smashed. Yeah. Wonder how much coverage they were able to do there. I mean, not a ton, right? The volume wasn't that high. The highest volume candle was 38,000. Mac Dork update? Oh, wait, hold on. Looking good. Let's see. Rob. Hold on. Any more minutes. Okay, so we have the crossover. I think that's bullish. Hmm. Looks good. Looks about the same, I think. Does this mean the info you're using to predict obligations is flawed, or they're just able to dodge? Well, it's still not over yet. People are very impatient. Yeah, I know. Almost 170 calls. Probably not terrible. I mean, still not over is not hopium. It's just a fact. It's not over. How long does it usually take until SPY picks a direction? Could be the rest of the day. There's a lot of repositioning, so we'll see. Weekly YOLOers? My October calls are still green. Yeah, so are mine. Quit whining. Fucking really. Rev motionless? It's turning back around. There's still mutual fund pressure. There's just no ETFs. What strikes are the October calls? Mine are at 30. I have them at 50, 38, 75, and 30. Are October calls mostly green because of Theta, a great IV entry, or both? Both? SPX 39.25 for 9.23. Would you have set tighter stops or let them ride into tomorrow? I mean, I have 3900s and I haven't closed them. Those contracts can move really, really fast. Did you have you straddled, right? I assume, and you sold off your short side already? But it never runs at the last minute. Why do you always think it will? It does, and it has before. Also, I know that if GME breaks 28.50 and $30, the rehedging of the options chain is going to drive prices higher. Nice, Ryan Cohen, GME ETF. See you later, man. GME breaking 28.50 is a big if now. I don't think so. I think it looks fine. I think you guys see red candles and you fucking panic and overreact. You sound surprised. No, I don't. FOMC is it was it 2? Are you talking about like the speech? I think it's at 2:30. Are you streaming our boy? I could throw him up. I was referencing the impatience of people swarming in the Opex dead comments 2 minutes after the Fed announcement. Yeah. Just ignore them, right? Like, those are the people that act like that react like that to like any movement in the market. They're just dumb, right? Like, those are the people you make money off of. The market is not recovering enough for us to get real active fund pressure yet. We don't need a lot of pressure. Remember, the MM is buying into rising prices. That's why we're outperforming the S&P. Net negative gamma. So all we need is consistent upside. I don't know how you handle all the people freaking out about Opex. It's sad to see those people freaking out. Props to you, man. I don't know. Just kind of ignore them. Wrong or right, I generally have a lot of conviction in whatever I'm doing. So far, it's served me well. Like, GME's almost fully recovered from the drop. The market is nowhere near, right? This, like, high degree of sensitivity to active fund pressure and market fluctuations is very bullish for us, provided the price improves. Daily Nopex question count 439. Thanks, Mike Sell CCs. You're a treasure. Genuinely might get 1K Nopex comments before 1K likes. One could only hope. You know my favorite part about any run on GME? Is all the people that are like, fuck, I sold right before it ran. I love those people. There is no reward without risk in the market, and if you can't handle risk, you should probably find something else to do with your time. Joke's on you. I always expire before it runs. Just wish them good luck. I'm still fucking up on my October calls. I bought the top and sold the bottom, Gurk. Just if you just inverse yourself, popcorn trader, you'd make so much money. How's the housing market where you live? Overpriced? I mean, Ivy dropped on them a little bit, but they're still up. Oh, shit.
We are moving our
It's
policy
Jerome.
stance purposefully to a level that will be sufficiently restrictive to return.
I forgot to click
2%.
live.
In addition, we are continuing the process of significantly reducing the size of our balance sheet. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed from the historically high growth rates of 2021, which reflected the reopening of the economy following the pandemic recession. Recent indicators point to modest growth of spending and production. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, in large part reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment, while weaker economic growth abroad is restraining exports. As shown in our summary of economic projections, since June, FOMC participants have marked down their projections for economic activity, with the median projection for real GDP growth standing at just 0.2% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. Despite the slowdown in growth, the labor market has remained extremely tight, with the unemployment rate near a 50-year low, job vacancies near historical highs, and wage growth elevated. Job gains have been robust, with employment rising by an average of 378,000 jobs per month over the last 3 months. The labor market continues to be out of balance, with demand for workers substantially exceeding the supply of available workers. The labor force participation rate showed a welcome uptick in August, but has little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time,
GME's in the bottom left.
easing the upward pressure on wages and prices. The median projection in the SEP for the unemployment rate rises to 4.4% at the end of next year, a half percentage point higher than in the June projections. Over the next 3 years, the median unemployment rate runs above the median estimate of its longer-run normal level. Inflation remains well above our 2% longer-run goal. Over the 12 months ending in July, total PCE prices rose 6.3%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In August, the 12-month change in the Consumer Price Index was 8.3%, and the change in the core CPI was 6.3%. Price pressures remain evident across a broad range of goods and services. Although gasoline prices have turned down in recent months, they remain well above year-earlier levels, in part reflecting Russia's war against Ukraine, which has boosted prices for energy and food and has created additional upward pressure on inflation. The median projection in the SEP for total PCE inflation is 5.4% this year and falls to 2.8% next year, 2.3% in 2024, and 2% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.75 of a percentage point, bringing the target range to 3 to 3.25%. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. Over coming months, we will be looking for compelling evidence that inflation is moving down, consistent with inflation returning to 2%. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate. The pace of those increases will continue to depend on the incoming data and the evolving outlook for the economy. With today's action, we have raised interest rates by 3 percentage points this year. At some point, as the stance of monetary policy tightens further, it will become appropriate to slow the pace of increases while we assess how our cumulative policy adjustments are affecting the economy and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. Restoring price stability will likely require maintaining a restrictive policy stance for some
Is the
time.
video frozen?
The historical record cautions strongly against prematurely loosening policy. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year, 1 percentage point higher than projected in June. The median projection rises to 4.6% at the end of next year and declines to 2.9% by the end of 2025, still above the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now.
He hasn't said Volcker once.
We are taking forceful and rapid steps to moderate demand so that it comes into better
got you,
alignment
Trash.
with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth, and there will very likely be some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. We will keep at it until we're confident the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilik from the New York Times. I wonder if you could give us a little detail around how you'll know when to slow down these rate increases and how you'll eventually know when to stop.
So I will
Opex?
answer your question directly, but I want to start here today by saying that my main message has not changed at all since Jackson Hole. The FOMC is strongly resolved to bring inflation down to 2%, and we will keep at it until the job is done. So the way we're thinking about this is the overarching focus of the committee is getting inflation back down to 2%. To accomplish that, we think we'll need to do two things in particular: to achieve a period of growth below trend and also some softening in labor market conditions to foster a better balance between demand and supply in the labor market. So on the first, committee's forecasts and those of most outside forecasters do show growth running below its longer run potential this year and next year. On the second, though, so far there's only modest evidence that the labor market is cooling off. Job openings are down a bit. As you know, quits are off their all-time highs.
Now,
There's
this
some
is
signs
pod
that
racing?
some wage
This is
measures
awesome.
may be flattening out, but not moving up. Payroll gains have moderated, but not much. And in light of the high inflation,
Is it
we're
bad
seeing,
that I'd
we
rather
think
my
we'll need to,
SPX
in
calls
light of
print
what
right
I just
now
said,
than
we
my
think that we'll need to
GME
bring
calls?
our funds rate to
They
a
cost
restrictive
more
level
money.
and to keep it there for some time. So what will we be looking at, I guess, is your question. So we'll be looking at a few things.
Chill.
First, we'll want to see growth continuing to run below trend. We'll want to see movements in the labor market showing a return to a better balance between
I mean,
supply
both
and
is
demand.
cool.
And ultimately, we'll want to see clear evidence that inflation is moving back down to 2%. So that's what we'll be looking for. In terms of reducing rates, I think we'd want to be very confident that inflation is moving back down to 2% before we would consider that.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Can you talk about how you factor in the variable lags on inflation and the extent to which the outlook for rates should be seen as linear in the sense that you keep raising rates, or can you envision a time when there's a pause to kind of look at what has been wrought in the economy from the rate increases? Thank you.
Sure. So, of course, monetary policy does famously work with long and variable lags. The way I think of it is our policy decisions affect financial conditions immediately. In fact, financial conditions have usually been affected well before we actually announce our decisions. Then changes in financial conditions begin to affect economic activity fairly quickly, within a few months. But it's likely to take some time to see the full effects of changing financial conditions on inflation. So we are very much mindful for that. And that's why I noted in my opening remarks that at some point, as the stance of policy tightens further, it will become appropriate to slow the pace of rate hikes while we assess how our cumulative policy adjustments are affecting the economy and
Oh,
inflation.
he's saying bullish things.
So that's how we think about that. Your second question, sorry,
Yeah,
was...
you opened that pretty little mouth.
Point in time you can see pausing. Is it linear?
Don't listen to this guy. He's a bear. Fuck him.
I
Full
should know better
bull.
than to not talk with my microphone.
I should know better than to answer your second question.
Oh, there you go. Is it linear? Do you keep raising rates, or is there a pause that you could envision where you kind of figure out what has happened to the economy and give time to catch up in the real economy, the rate increase time to catch up in the real economy? Thank you.
So I think it's very hard to say with precise certainty the way this is going to unfold.
Steve's
As I
cool. You're
mentioned,
thinking of Rick.
what we think we need to do
I don't
and
know
should
about
do
that.
is to move our policy rate to a restrictive level that's restrictive enough to bring inflation down to 2%, where we have confidence of that. And what you see in the SEP numbers is people's views as of today, as of this meeting, as to the kind of levels that will be appropriate. Now, those will evolve over time, and I think we'll just have to see how that goes. There is a possibility certainly that we would go to a certain level that we're confident in and stay there for a time, but we're not at that level. Clearly today we're just
say 2% more.
We just move, I think, probably into the very
say
lowest
2%.
level
Jackson's
of what might
Hole.
be restrictive.
Don't say Volcker.
And certainly in my view and in the view of the committee, there's a ways to go.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. The projections show the unemployment rate rising to 4.4% next year. And historically, that kind of rise in the unemployment rate would typically bring a recession with
jobs.
it.
Let's go.
Should we interpret that to mean no soft landing? And is that kind of rise necessary to get inflation down?
Only up.
Right. So you're right. In the SEP, there's what I would characterize as a relatively modest increase in the unemployment rate from a historical perspective, given the expected decline in inflation. Now, why is that? So really, that is what we generally expect. Because we see the current situation as outside of historical experience in a number of ways, and I'll mention a couple of those. First, and you know these, but first, job openings are incredibly high relative to the number of people looking for work. It's plausible, I'll say, that job openings could come down significantly, and they need to, without as much of an increase in unemployment as has happened in earlier historical episodes. So that's one thing. In addition, in this cycle, longer run inflation expectations have generally been fairly well anchored.
You beautiful motherfucker.
As
God,
I've said,
I love
there's
this man.
No basis for complacency there, but to the extent that continues to be the case, that should make it easier to restore price stability. And I guess the third thing I would point to that's different this time is that part of this inflation is caused by this series of supply shocks that we've had, beginning with the pandemic and really with the reopening of the economy, and more recently amplified and added to by Russia's invasion of Ukraine, have all contributed to the sharp increase in
Let's see
inflation.
if we can print those calls that guy bought too far out of the money.
These are the kinds of events that are not really seen in prior business cycles. And in principle, if those things start to get better, and we do see some evidence of the beginnings of that, it's not much more than that, but it's good to see that. For example, commodity prices look like they may have peaked.
Thanks,
for
Jerome.
now. Supply chain disruptions are
saw you
beginning
reach
to
under the
resolve.
podium
Those
there and tweet
developments,
that.
if sustained, could help ease the pressures on inflation. So let me just say, how much these factors will turn out to really matter in this sequence of events, it remains to be seen. We have always understood
Macy's at
that
17.
restoring price stability while achieving a relatively modest decline, a rather increase in unemployment, and a soft landing
Thanks,
would
Jets
be
fan.
very challenging. And we don't know. No one knows whether this process will lead to a recession, or if so, how significant that recession would be. That's going to depend on
I don't know if you guys
how quickly
noticed
wage
this,
and price
but
inflation
fucking
pressures
Revlon
come down,
is
whether expectations remain
$6.69
anchored,
right now.
and whether, also, do we get
It
more
moved
labor supply,
from-
which would help as well. In addition, the chances of a soft
It moved
landing
from the mark of the
are
beast to
likely
full
to diminish
bull,
to the extent that
like
policy
that.
needs to be more
Yeah,
restrictive
Docu's ripping, M's
or
ripping,
restrictive for longer.
GME's going up,
Nonetheless,
SPX is
we're committed to
ripping,
getting inflation
Upstart's
back down to
moving
2%
back up to
because we think that
25.
a failure to restore price stability would mean far greater pain later on.
AMD's ripping, which is dope.
Are vacancies still at the top of your list in terms of understanding the labor market and how much room there is there?
Yeah, AMD's
Yes,
at 78 now.
vacancies are still almost 2-to-1 ratio to unemployed people. That and quits are
Tesla
really
up
very good ways to look at how
1.3%,
tight the labor market is and how
QQQ's
different it
hitting-
is from other cycles.
QQQ's just
where,
rocketing, but
where generally the unemployment rate itself is the
hitting
single best indicator. We
125
think those
basis
things have
points.
for quite a time now,
Microsoft up 160.
really added value in terms of understanding where the labor market is.
Apple up 0.62.
Nick?
Nick Timmeros at the Wall Street Journal. You said not too long ago, in describing the policy destination, there's still a way to go. But
Yeah.
I imagine you have to have some idea about how you're thinking about your destination, whether it's a stopping point or a pausing point.
Jimmy
And so
rejects
I
it on
was wondering if you
29,
could discuss how you are thinking about
But support
as
at
the data come
28.50,
in,
right?
where that destination is, how it's moving up if inflation doesn't perform as you expect, Do you want to have a policy rate
Is that
that's
Michael
above,
Burry's brother?
the underlying inflation rate, for example? And do you have an estimate for where you think the underlying inflation rate might be in the economy right now?
Well, so, again, we believe that we need to raise our policy stance overall to a level that is restrictive. And by that I mean is meaningfully, putting meaningful downward pressure on inflation. That's what we need to see in the stance of policy. We also know that there are long and variable lags, particularly as they relate to inflation. So it's a challenging
Keep up the
assessment.
bullishness.
So what do you look at? You look at broader financial conditions, as you know, you look at where rates are, real and nominal in some cases. You look at credit spreads. You look at financial conditions indexes. We also, I would think, and you see this this is something we talked about today in the meeting and talk about in all of our meetings, and you see this, I think, in the committee forecast. You want to be at a place where real rates are positive across the entire yield curve. And I think that would be the case if you look at the numbers that we're writing down and think
Fubu's
about.
having a good day.
You measure those against some sort of forward-looking assessment of inflation expectations. I think you would see at that time, you'd see positive real rates across the yield curve, and that is also an important consideration.
Howard.
Hi, Howard Schneider with Reuters. Thanks for the opportunity. I just want to be clear on the steps. You say it's meeting by meeting, but it sure looks like we're going 75, 50, 25. Is 75 next month the baseline?
So we make one decision per meeting, and the meeting decision we made today was to raise the federal funds rate by 75. You're right that the median for the year end suggests another 125 basis points in rate increases. But there's another fairly large group that saw 100 basis points addition to where we are today. So that would be 25 basis points less. So, we're going to make that decision at the meeting. We didn't make that decision today. We didn't vote on that. I would say that, we're committed to getting to a restrictive level of for the federal funds rate and getting there pretty quickly. And that's what we're thinking about.
So just as a follow-up to that, I'm wondering about the sort of risk management considerations here. Given there's some discussion now of overdoing it, what's the incentive to continue front-loading right now? Is it lack of progress on inflation seen in the CPI reports, or is it a motivation to get as much done while the job market is still as strong as it is?
So what we've seen is our expectation has been that we would begin to see inflation come down, largely because of supply side healing. By now, we would have thought that we would have seen some of that. We haven't. We have seen some supply side healing, but inflation has not really come down. If you look at core PCE inflation, which is a good measure of where inflation is running now, if you look at it on a 3, 6, and 12-month trailing annualized basis, you'll see that inflation is at 4.8%, 4.5%, and 4.8%. So that's a pretty good summary of where we are with inflation, and that's not where we expected or wanted to be. So what that tells us is that we need to continue, and we can keep doing these, and we did today do another large increase as we approach the level that we think we need to get to. And we're still discovering what that level is, but people are writing that down in their SEP where they think policy needs to be. So that's how we're thinking about it.
Let's go to Colby. Thank you. Colby Smith with the Financial Times. Chair Powell, how should we interpret the fact that core inflation is still not forecast in the SEP to be back to target in 2025, and yet the dot plot projects cuts as early as 2024? And does that mean there's a level of inflation above the 2% target that the Fed is willing to tolerate?
So I guess core is at 2.1 in 2025, and in the median, and headline is at 2.0. So that's pretty close. I mean, we write down our forecasts and we figure out what the median is and we publish it. So it's not. I mean, I would say that if if the economy followed this path, this would be a pretty good outcome. But you're right, it is a tenth higher than 2%.
Okay, just as a quick follow-up, I mean, if the concern is that underlying inflation is becoming more entrenched perhaps each month, then why forego the more aggressive 100 basis point increase today? And does that risk having to do more later on?
Yeah, so we, as we said, at the last press conference and in between that one and this one, we said that we would make our decision based on the overall data coming in. So if you remember, we got a surprisingly low reading in July, and then a surprisingly high reading for August. So I think you have to, you can't really, you never want to overreact too much to any one data point. So if you look at them together, and as I just mentioned, if you really look at this year's inflation, 3, 6, and 12-month trailing, you see inflation is running too high. It's running 4.5% or above. You don't need to know much more than that. If that's the one thing you know that this committee is committed to getting to a meaningfully restrictive stance of policy and staying there until we feel confident that inflation is coming down. That's how we think about it.
Victoria.
But my calls are fine.
Hi, Victoria Guido with Politico. I wanted to ask about the balance sheet. You all have left open the possibility that you might sell mortgage-backed securities, but we've seen significant slowing in the housing market. Mortgage rates have gone up significantly, and I'm just wondering whether conditions there might affect your plans for how quickly you have the runoff on the MBS side.
So what we said, as you know, was that we would consider that once balance sheet runoff is well underway. I would say it's not something we're considering right now, and not something I expect to be considering in the near term. It's just it's something I think we will turn to, but the time for turning to it has not come and is not close.
Well, and will conditions in the housing market affect that decision?
I think a number of things might affect that decision, but the main thing is we're not considering that decision, and I don't expect that we will anytime soon.
Neil.
Thanks. Neil Irwin with Axios.
He's just not doing
a number
QT.
Of commentators have
He's like, we're not selling
come to
our
the view,
shit.
and including over at the World Bank, that simultaneous global tightening around the world creates a risk of a global recession that's worse than is necessary to bring inflation down. How do you see that risk? How do you think
he's
of
like trying to
coordination with
pump
your
the
fellow central
fucking market
bankers?
hard.
And is there much risk of overdoing it on a global level?
I feel like I'm going to be cash settling
So
these fucking calls.
actually, my colleagues and I, a number of my FOMC colleagues and I just got back from one of our frequent trips to Basel, Switzerland, to meet with other senior central bank officials from around the world. We are in pretty regular contact, and we exchange. Of course, we all serve a domestic mandate, domestic objectives, in our case, the dual mandate, maximum employment price stability. But we regularly discuss what we're seeing in terms of our own economy and international spillovers. And it's a very ongoing, constant kind of a process. So we are very aware of what's going on in other economies around the world and what that means for us and vice versa. The forecast that we put together, that our staff puts together, and that we put together on our own, always take all of that, try to take all of that into account. I mean, I can't
as
say
long
we
as
do
my
it perfectly,
Octobers
but
are
it's
up,
not,
I'm okay
it's not
with
as if we
holding
don't
them.
think
I don't know about the weeklies, though.
the policy
I may not hold
decisions,
those
monetary
overnight.
policy and otherwise, the economic developments that are taking place in major economies that can have an effect on the U.S. economy. That is very much baked into our own forecast and our own understanding of the U.S. economy as best we can. It won't be perfect. So, I don't see it's hard to talk about collaboration in a world where people have very different levels of interest rates. If you remember, there were coordinated cuts and raises and things like that at various times. But really, we're in very different situations. But I will tell you that our contact is more or less ongoing. And it's not coordination, but there's a lot of information sharing, and we all, I think, are informed by what other important economies that are important to the United States are doing.
Interesting.
Craig.
Craig Torres from Bloomberg. Chair Powell, you talked about some ways the higher interest rates are affecting the economy, but we've also seen a resilient labor market with durable consumption, strong corporate profits. And I'm wondering what your story is on the resilience of the economy. After all, you and your colleagues said, well, we started tightening in March when we were talking about interest rates in the future. And indeed, Treasury rates moved up, so we should have had a lot of tightening taking effect. Why is the economy, in your view, so resilient, and does it mean that we might need a possibly higher terminal rate?
You're right, of course. The labor market in particular has been very strong. But there are the sectors of the economy that are most interest rate sensitive are certainly showing the effects of our tightening. And of course, the obvious example is housing, where you see declining activity and of all different kinds, and housing price increases moving down. So we're having an effect on interest-sensitive spending. I think through exchange rates, we're having an effect on exports and imports. I think so. All of that's happening. But you're right. And we've said this. This is a strong, robust economy. People have savings on their balance sheet from the period when they couldn't spend and where they were getting government transfers. There's still very significant savings out there, although not as much at the lower end of the income spectrum, but still some savings out there to support growth. The states are very flush with cash, so there's a good reason to think that this will continue to be a reasonably strong economy. Now, the data sort of are showing that growth is going to be below trend this year. We think of trend as being about 1.8% or in that range. We're forecasting growth well below that, and most forecasters are. But you're right. There's certainly a possibility that growth can be stronger than that, and that's a good thing because that means the economy will be more resistant to to a significant downturn. But of course, we are focused on the thing I started with, which is getting inflation back down to 2%. We can't fail to do that. If we were to fail to do that, that would be the thing that would be most painful for the people that we serve. So for now, that has to be our overarching focus. And you see that, I think, in the SEP, in the levels of rates that we'll be moving to reasonably quickly, assuming things turn out roughly in line with the SEP. So that's how we think about it.
Thank you, Mr. Chairman. In a world of euphemisms that we live in here with below-trend growth and a modest increase in unemployment, I'm wondering if I could ask you a couple of direct questions for the American people. Do the odds now favor, given where you are and where you're going with interest rates, favor a recession? 4.4% unemployment is about 1.3 million jobs. Is that acceptable job loss? And then given that the data you look at is backward-looking and the lags in your policy are forward-looking and you don't know what they are, how will you know, or will you know, if you've gone too far?
So I don't know what the odds are.
Why is CNS closing exciting? If there's any
a very
settlement,
high likelihood.
When is
that
Opex?
We'll have, a period of.
I'm trying to time entry perfectly.
Growth, by which I mean much lower growth, and we're seeing that now. So
don't
the
worry
median
about
forecast,
it,
I think, this year for among my colleagues and me,
I think you may have missed
0.2%
the timing
growth.
window.
So that's very slow growth, and then below trend next year. I think the median was 1.2, also well below. So that's a slower. It's a very slow level of growth, and it could give rise to increases in unemployment. But I think that is something that we think we need to have, and we think we need to have softer labor market conditions as well. We're never going to say that there are too many people working, but the real point is this. Inflation, what we hear from people when we meet with them is that they really are suffering from inflation. And if we want to set ourselves up, really light the way to another period of a very strong labor market, we have got to get inflation behind us. I wish there were a painless way to do that. There isn't. So what we need to do is get rates up to the point where we're putting meaningful downward pressure on inflation, and that's what we're doing. And we certainly don't hope. We certainly haven't given up the idea that we can have a relatively modest increase in unemployment. Nonetheless, we need to complete this task.
But how will you know, or will you know, if you've gone
JPAL says when we meet with people most affected by inflation,
hypothetically,
do you think
deal
JPAL
with
is
that
anywhere
question.
near
I mean,
the
our-
poorest?
Again, our
He's just
really
talking
tight
about
focus now
corporations
continues
with
to
debt.
be ongoing rate increases to get the policy rate up where it needs to be. And as I said, you can look at this SEP as today's estimate of where we think those rates would be. Of course, they will evolve over time.
Chris Rugaber.
Thanks. Chris Rugaber, Associated Press. I wanted to follow up with what you just mentioned about the labor market. You've said several times that to have the labor market we want, we need price stability, and you've suggested maybe there isn't a trade-off in the long run. But in the short run, there is a lot of concern, as people have been expressing here, about higher unemployment as a result of these rate hikes, or as a result of the rate hikes. So can you explain, though, what about high inflation now threatens the job market? I mean, you seem to suggest that inflation, high inflation will eventually lead to a weaker job market. So can you spell that out a little more for the general public and how that would work?
So for starters, people are seeing their wage increases, their wage increases eaten up by inflation. So if your family is one where you spend most of your paycheck, every paycheck cycle, on gas, food, transportation, clothing, basics of life, and prices go up the way they've been going up, you're in trouble right away. You don't have a cushion, and this is very painful for people at the lower end of the income and wealth spectrum. So that's what we're hearing from people is, it very much that inflation is really hurting. So how do we get rid of inflation? And as I mentioned, it would be nice if there were
affect far
a way
more
to
than
just
a billion
wish
people.
it away, but there isn't. We have to get supply and demand back into alignment, and the way we do that is by slowing the economy. Hopefully, we do that by slowing the economy, and we see some softening in labor market conditions, and we see a big contribution from supply side, improvements and things like that. But none of that is guaranteed. In any case, our job is to deliver price stability, and I think you can think of price stability as an asset that just delivers large benefits to society over a long period of time. We really saw that for a long time. The United States had 2% inflation, didn't move around much, and that was enormously beneficial to the public that we serve. And we have to get back to that.
I mean, you joke, but there are lots of people who don't know they're poor. Yeah, I know.
To pull back from the task of doing that is you're just postponing. The record shows that if you postpone,
there's a large group of
delay
people that make between like $60,000 and $120,000 a year and think they're rich.
I think we're moving to do what we need to do and do our jobs, and that's what you see us doing.
There's also a lot of people who think $1 billion is a lot.
So you had said that Americans and businesses need to feel some economic pain as we go forward. How long from here should Americans be prepared for that economic pain?
Keep my salary out of your
long?
mouth.
I mean, it really depends on how
Upper,
long it
lower
takes for
class.
wages and more than that, prices to come down, for inflation to come down. And you
it depends
what
where you
see in
live.
our-
60 to
in our
120
projections
is,
today
or 100 is
that,
not necessarily
inflation
middle class.
moves down.
It's very dependent on where you live.
Significantly over the course of next year, and then more the next year after that. And I think once you're on that path, that's a good thing, and things will start to feel better to people. They'll feel lower inflation. They'll feel that the economy's improving, and also if our projections are close to right, you will see that that the costs in unemployment they're meaningful, and they're certainly very meaningful to the people who lose their jobs, and we talk about that in our meetings quite a lot. But at the same time, we'd be setting the economy up for another long period.
What's your starting?
This
I saw a
era has been
rocket.
noted for very long expansions. We've had 3 of the 4 longest in measured history.
A lot of
since we
repositioning
got
on GME.
inflation
Are they
under
closing
control.
that
And
fucking
that's not
2850
an accident.
spread?
So when inflation is low and stable, you can have these 9, 10, 11, 10-year,
Or at least the short leg of it.
expansions, and you can see what we saw in 2018, 19, and 20, which was very low unemployment, the biggest wage gains going to people at the low end of the spectrum, the smallest racial gaps that we've seen in
There's also a lot of puts closing on SPX. That's what I'm watching right now.
But to get there, we're going to have to get supply and demand back in alignment, and that's going to take tight tight monetary policy.
Man,
for a
people are
period of
getting
time-
real
period of time.
fucking bullish on SPX.
What is that economic pain in your mind? Is it job losses? Is it higher interest rates on credit cards? What
4,200?
is that economic pain?
So it's all of those things. Higher interest rates, slower growth, and a softening labor market are all painful for the public that we serve. But they're not as painful as failing to
People
restore
betting
price
on a
stability.
reversal? Like,
And then having to come back and do it,
betting on this?
down the road again, and doing it at a time when actually now people have really come to expect
No fucking way.
high inflation. If the concept of high inflation becomes entrenched in people's economic thinking about their decisions, then sort of getting back to price stability, the cost of getting back to price stability just rises. And so we want to avoid that. We want to act aggressively now and
It'll
get
be back
this
to
job
like
done and keep at it until it's done.
4,500. I don't think they're not really betting that high. It's just
Business. Existing home sales have fallen for
That
7
range,
months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans
he
to
didn't.
reset
He said
the housing
100,
market.
another
I was wondering if
100
you could
to
elaborate on what you mean when you
125
say
into the end
reset
of the year.
and what you think it will take to actually get there.
So when I say reset, I'm not looking at a
That'd be a hell
particular
of a fucking
specific
rally if it
set
hit
of
4,500.
data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where, famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place. There are also longer run issues though with the housing market, as you know, where it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Shelter made up such a large part of this hot CPI report that we saw. Do you think that there is a lag and that we will see that come down in the coming months, or do you think that there's still this imbalance that needs to be addressed?
I think that shelter inflation is going to remain high for some time. We're looking for it to come down, but it's not exactly clear when that will happen. So it may take some time. So I think hope for the best, plan for the worst. So I think on shelter inflation, you've just got to assume that it's going to remain pretty high for a while.
Okay, we'll go to Jean for the last question.
Hi, Jean Young with Market News. You've talked about the need to get real rates into positive territory, and you said earlier that policy is just moving into that territory now. So I'm curious, how restrictive is rates at 4.6% expected? Is that expected to be next year? How restrictive?
So I think if you look, when we
Did
get
you
to
just say shit?
let's assume we do get to that level, which I think is likely. What you're going to do is you're going to adjust that for some forward-looking measure of inflation, and that could be you pick your measure. It
Right, he
could
did.
be, there are all kinds of different things you can pick, and you get. But what you'll get is a positive number. In all cases, you will get forward inflation expectations in the short term. I think that are going to be, assuming that we're doing our jobs appropriately, that will be significant. So you'll have a positive federal funds rate at that point, which could be 1% or so. But I don't know exactly what it would be, but it would be significantly positive when we get to that level. And let me say, we've written down what we think is a plausible path for the federal funds rate. The path that we actually execute will be enough. It will be enough to restore price stability. So this is something that, as you can see, they've moved up, and we're going to continue to watch incoming data and the evolving outlook and ask ourselves.
It looks like 3850 puts are
is in the right
repositioning
place
right
as we
now.
go.
So
thank you very much.
You're seeing different levels of put capitulation, right? All right, that's it from JPass. Let me kind of try to. All right, here. So you're seeing different levels of put capitulation on SPX. You're seeing 3900s closed here, right? And now on this revisit, we're seeing more 3850s closed out. Are you straddling SPX overnight? I don't think so. I made more than enough off puts today. I'm probably just gonna hold open my my like long call position through tomorrow. I'm pretty confident in the upside here. First of all, certainty is important, but more than the certainty and more than what Powell has to say and the fund rate changes, you know, we're still looking at a very, very oversold short side position on SPX. We're even seeing it on GME, right? We're seeing put side capitulation as we push up through this 2850 barrier. It's starting to look like that big straddle from yesterday is getting closed off. So, some bullishness there. I don't know if that's indicative of like a later covering. It may not be, right? It may just be that GME will rise with the rising market. There is still a lot of sensitivity. I don't think it's safe to say that there won't be any more covering, or there won't be covering tomorrow or into the end of the week. There could be. There's some risk there, given, you know, the potential volatility for a change in the hedge on GME. But it'll also depend on, you know, call side capitulation and weekly selling off. So, like, I probably wouldn't carry weeklies much past whatever price action happens today, but I probably also won't sell off October calls today at all. They're still up quite a bit. I think any bump in IV is going to push them up even higher. There's still a decent amount of time left on them, and they're fairly close to the money. I may close out the 50s, or at least I'll think about it. The larger OI was at 3,800. So 3850 is closing out, but that's also, you know, those are closing out and it's leading to call buying. And we're seeing calls coming in on SPX at 39.5, 4,000, or 39.50, 4,000, 4,100, 4,200. So, you know, now that that rate raise is in place, confidence is going to restore, and we can see, you know, incremental upside moves. There's still a lot of sensitivity on the gamma flip in these stocks, and if they push up through those breakpoints, they are going to get kind of volatile. What about October 35s? Yeah, I'll hold my I have 50, 38, 75, 35 and 30 for October. I'll probably hold all of them for now. The 50s I'm most concerned with, because IV could drop off even with price rising. But I think the market will be fairly volatile over the next couple days, and that should help sustain our volatility at least. So, you know, the upside price action buying me a little more time on my position more than anything else. As far as Upstart, I mean, I'm kind of locked into Upstart anyway because of the CSPs, at least till Friday. I don't really care about. It barely cost anything. Obviously, Revlon I'm staying in for other reasons besides Opex. AMD I'm also going to stay in. AMD is very, very well set up for a move to the upside, especially if we expect the indexes to move up. It's a mega cap or very close to it. I'm holding 130 September 23 GME 35s. Should I dump? Those aren't looking very likely if they don't move up today. I mean, I can't say if you should dump or not, but I mean, the chances of those going in the money today are very slim. I'm thinking of carrying my 29.50 weeklies overnight because they're so close to in the money. Mistake or not, I mean, we'll need to break. If you hold them into tomorrow, your break even's going to move up on those. And we'll need to move above, probably sufficiently above $30 in order for those to print. I already have SPX calls. I had a straddle earlier. I sold off the short side. And now I have 3,900 calls that expire on the 30th. So am I going to hedge the downside on them overnight? I don't know. Probably not. Jimmy Barfi dropping at IBKR. How much? Gonna average down M calls? I don't know how much room I have to average them down. I could. Maybe if they fall sub, like 50% loss, I'll average them down. If you've got money to buy 130, 35 Cs, why not buy more theta? I'm bad at what I do, but that seems really bad. Some people just want to gamble. I mean, it's a gamble, right? Anytime you buy weeklies. What are your thoughts on Fubo price improvement over the next couple months? I'm thinking it will move with the market rally, but it might stay elevated on a subsequent drop. I think it'll stay fairly elevated. I still think institutional interest is building up in it. I don't know how well it's set up for a spring, but accumulation's picking up. I think we're going to see growth on it over the next, like, 3 months. Sustained, slow, probably. What happened to the 28 support? We fell through it. We bounced back, retested, and then fell through again. Is Jimmy dead? I mean, you're seeing a lot of call side capitulation here. Weekly is selling off. Easy for AMD short-term SPY rally. For AMD with a short-term SPY rally. Currently, I could see like 384 or 386.12. 386.12 is kind of my PT. It could move higher depending on how sustained the rally is. So now Nopex, I mean, this is weeklies selling off. Probably people here are selling out of weeklies. Not a big deal. They don't own very many of them. It'll recover pretty quickly. Do you think you'll start selling GME CCs tomorrow? Maybe. I may wait until the end of the week to sell them. What's your outlook on GME into the end of the week? It'll depend on the market, I think. We're beyond the period for, active participant covering, but we're not beyond the period for ETF, like, rebalance resolution. So I want some exposure, just not, like, a ton. And I think this exposure I have right now is sufficient. I'm not super worried about its loss potential. I'm up about, right now about 8,000 on October calls, and I'm down about 9 on weeklies. So not too much of a loss so far. You know what I think? After earnings, the run from 23 to 30 was them kicking their open obligations to October. Maybe. We'll see how October shapes up. I'm disappointed in GameStop's management not dropping good news. I mean, what do they have to say? Always the same amount of bullish. Well, we don't know if there is any ETF rebalance settlement, right? That's just speculation that the ETFs, there's a chance that the ETFs were overlent, right? And that they would have some sort of obligation due to the split. I don't think there's any guarantee of that price action, though. Like, that's an obligation that we can't even track. Like, we can't even prove that it exists. If it were a thing, I mean, it could play out over the next, like, 2 days. I'm not sure about MSCI. It seems to be kind of all over the place, but there's not a lot of GME in there anyway. But, Russell 1K and S&P over the next 2 days for their ETFs. Worth waiting for an IV bump? It might be. Yeah, the 50s got crushed a little bit. How do you think they keep dodging Opex? I don't know. It kind of seems like what we were talking about, that they just walked away. There's just no, like, if they don't generate obligations, they don't have any to cover, right? And the period in which we see them generating obligations isn't sufficiently far from the next period of covering. So if we think about it, like, here, let me pull up the chart 1 second. I'll try to show you kind of my thoughts on this. It's hard to say though, because I can't say I'm right that they've walked away. It does seem like they did. But if we consider these downside periods of shorting, right, of like massive shorting and synthetic share usage, let's look at the local one. You know, we're seeing obligations like built up into an Opex period, like January, right? And we're seeing them covered out in March. And then, you know, we're seeing them built from end of March through May, and then covered in May. And then I think they stopped, right? Like, they just stopped shorting. Stop shorting volatility, stop shorting the underlying. I think through this period, they kind of just developed liquidity in order to get, you know, the borrow rate back down, which they have. And in order to, you know, stabilize the price action of the stock. Because after March and May, when we were hitting those like 100% borrow rates, you know, things had obviously gotten out of hand for them. And then with the split on the table as well, the best solution would be to walk away from the risk. And then we're seeing, you know, another sustained period of shorting showing that they have returned. But I don't think we've had sufficient time from this period of shorting to our, you know, next obligation period. So, you know, the sustained shorting into the bottom looks really good for Opex because that's what we expect, right? We expect this move down into an Opex period. But I don't think the period of sustained shorting is sufficiently long. I mean, to me, this looks more like this period than it does, like, especially now with the price action of this week. It feels more like this period than it does like March. And that's tricky, right? Because this throws all the right signals. And, you know, we're seeing overshort, we're seeing huge amounts of puts bought. But if they just walked away and didn't generate any significant obligations during this period, then we have this huge gap in the timeline for GME where we just have no obligations generated, which would explain why like August had no volatility. And you know, why we saw ETF FTDs occur here. But we didn't see any ETF FTDs occur for beginning of September, right? Which would, you know, have been generated back here. And so if it's as simple as that, I mean, that's great for the future, especially if they've, you know, returned to shorting, but not good for the near term, right? Because that could mean GME prices below 19 before we see any covering cycle. We'll see though. I mean, we have some time in the period of stabilization here still. And, you know, potentially some time still to see upside. So 10, 20, 30% VUPs in June, but very stable, right? Like very low obligation generation. And yeah, we saw upside, right? But there wasn't really any short generation creating that upside. You know, I think a lot of this period was still clearing out obligations created back here. And they did. They succeeded in getting the, you know, the borrow rate down back into a manageable level, down around like 6 to 10%, right? From our highs here of like 100%. So, you know, it took them a while, but they did get, you know, that liquidity back and back under control. I mean, that's the risk with doing these positions on GME or any of these other stocks is that, you know, when you run out of liquidity, if pressure comes in, you're in a very risky spot and you have to unwind that pressure somehow. No, I didn't sell my October calls yet. Because I'm still going to wait out the possibility, I think with the October calls, I'm going to wait out the possibility of the split generating obligations. So at this point, you think they can control volatility at any time? I think they've always mostly been able to. Good cat AMD SPY entries for Vuppies. Now that the rate hike is out of the way, seems all-time low. I mean, I'm already in AMD quite a bit. I have cat positions, some that I bought earlier in the week, some that I bought today. I stopped out of all my October calls. I know they killed Ivy. Anytime you get a weekly sell-off like that, Ivy's gonna crush out. It can bounce back though. And my IV entry is really low, so I don't really mind holding through it. I'm willing to take a small loss to find out what happens over the next couple days. Does a drawn-out recession, stagflation, naturally reduce volatility? Sure, but we're in a bear market, right? It reduces liquidity because you have fewer participants. I'm an upstart. Any potential for October call still? Yeah, I'm mostly because it's more of a, like, less Opexy. I mean, there has Opex price action, but it also just has periods of, you know, upside growth in it. It's a pretty liquid stock, and a lot of people buy it. Upstart is still on Reg Show and still has a shitload of FTDs. I'm gonna stay in Upstart. I have lots of calls there though. I have October, December, and January. What if I remove Guybrush and then we rip? I'll remove the angry banana. All right. Quick, make me a mod. Time to shut down the Discord GME channel. No. It'll be alright. Aren't split obligations due in October? 3 months from the split. No? That's not, I mean, that's not how forward contracts are written. They're written to quarterly expirations. Stickle for the VUPs. Works every time, 40% of the time. We'll see what happens overnight. You should remind everyone not to over position. What's with the crazy SPY ripsaw action? This is the craziest afternoon of ups and downs. I mean, lots of repositioning. And we don't know where it's going to settle out until we start to see some OI prints. Is there a reason to think that the counterparty when using CNS is the NSCC? I mean, yeah. So when CNS is used, there's no new obligation created because the NSCC counterparty is each side of CNS. I mean, CNS just destroys the obligation, right? That's why low volume's bullish, because low volume means it makes it harder for them to clear obligations through CNS. How's the possibility of no Opex runs change your CC strategy? I mean, I just keep selling them. You know, I own a bunch of other stocks that don't have Opex runs, and I just sell covered calls on those. I don't think we're beyond Opex runs, but I do think that, you know, the split and the liquidity generated therein could have at least slowed down or paused the cycle. I think they got the fuck out. Honestly, like, I think they got the fuck out before the split happened. I think we saw them cover up remaining obligations from the time the split was announced in March, and then especially after they changed the corporate charter. I think from the time they changed the corporate charter through the split, they covered all their outstanding obligations in order to not have a deficit. And that's why we saw, you know, that consistent rise in price. Like, this was just them exiting, right? And then I think after the split and after the last of the ETF obligations were closed out in August here, I think then they started shorting again. So if you consider they reset their whole position to 0 here, then this shorting won't generate obligations for, you know, a couple months. Why would they short if they were out of their obligations? Because the volatility on GME remains attractive. GME is illiquid. It generates large amounts of volatility very, very rapidly. That's profitable if you're selling volatility, right? XRT is still borked. I mean, XRT hasn't been back on threshold for a while now. Are we just going to ignore the market crashing? It's not crashing. It's probably just moving to 3,800 again. When I see you, I turn into a telescope. Thanks, Kendra. Okay, witnessed, popcorn trader. I'm keeping my 3,900 spy calls open. Would you average down 930 $30 calls bought on GME? On GME bought yesterday. I mean, if you have an opportunity to, you could, yeah. The only thing green in my port is Fubo and UWMC. I need to rethink all of this. Would $20 puts for mid-October be a decent hedge for a long GME position, assuming they continue to short for a few weeks? $20 puts mid-October. A bit far out of the money. I mean, you're talking about like a really hard push down. How far out are your SPX calls? 930. Spy broke 380. Do you see it hitting 360? Not necessarily, no. I mean, SPX is still at 38.14, so it hit a low of 38.08. Roses are red, violets are blue. Candles go down, I lose money too. Thanks, Dangerous Dan. That's usually how it goes, if you're long. Yeah, there's no upward price action this week. I agree. We could see it drop. But I don't think it'll drop to necessarily to those levels. I mean, interest will have to pull out almost entirely. And you need like we need to revisit like the shorting period, like from like early Feb, end of January, or like, which is actually really high volume shorting. There's a lot of buyers for GME at those low prices, right? It gets really risky for them to drop it too much. You think RC's ruined his rep with retail now? No. I mean, maybe with people who own BBBY, but that's a small subset of people who own GME, right? Am I the only one with GME 30Cs for 1021 with a cost basis over $3? Yeah, you might be. Yeah, I mean, yes. So I still don't like buying puts for that period because the theta decay is generally worse than the price drop. $439 pre-split, checking in. I have 175s and 180s for Caterpillar for October. Or for November. I have 175s for October, 180s for November. $415 post split, checking in. I gotta have everything except October 28 75s. Fair. I think you would say cycles are finished. Yeah, the volatility is dying off, but they started shorting us again. When do you expect SPY and QQQ to bounce back? We'll see what happens overnight. Probably not in the day session. SPX October 21, 4000C thoughts. SPX October 21, 4000. Risky. Really fucking far out of the money. A lot could happen between now and then. Yeah, I don't think we're running today. I mean, at least it doesn't look like we are. Can I start crying over my M calls now? I mean, if you want to. Some SPY straddles before the meeting, and they're down like 15%, hoping for a more directional move. Do you think it's better to hold in the next few days for a more directional move, like over 400? Wait, you bought SPY straddles at the meeting and you're down? How? You have a $5 move to the downside from where we were trading at before the meeting. That doesn't sound right at all. Did you enter them like, even if you entered there, you'd still be up. Out of the money strangle or straddle? Uh, 50s? Yeah, probably. I don't think we're going to get a volatility spike. I'll keep the 38s. The weeklies are already dead. SPY's finding some support now. Not a terrible entry for AMD. Yeah, those are weeklies. Sell those off. Weeklies. GME weeklies. Have any other weeklies? No. Okay. Oh, these. Do I keep these? 30s and 35s? Maybe. Massive call sell-off. Jesus. Market's gonna open up, it's gonna be hysterical if the fucking market opens up like 200, 300 basis points tomorrow. Really? I mean, puts didn't really print much either. We dropped like $1.50 from our high. Print more than calls at least. It depends on which calls you had. So you have at the money puts, but you have out of the money calls. I still think the SPX. I mean, I'm holding my 3,900 calls for the SPX. They're paid for from the Straddle, but I'm gonna hold them. Could covering occur in after hours? I mean, technically covering could occur into close. It's happened before. It's really fucking unlikely. If we halt into close, how are you going to react? I still have October calls. I mean, I'll be perfectly fine with that. Would you consider buying more October 28th 35Cs at this price? No. We'll have a better idea at the end of the week. We have to see how, options OI stands on GME after today's price action and after the weekly sell-off. Like DN, GN, GM are all going to drop, so, and VN should probably go up. With the rate info out and repositioning spikes, why do you think the SPY tanked so hard instead of rallying like expected? I mean, it did rally up to 39.07, then it tanked again. It can still rally again. I told you there's a lot of positions. So it can take like a few days for all of that to reposition. In the meantime, there's going to be like a lot of volatility, probably a lot of movement between 3,800 and 3,900. But you said yourself the macro is garbage. What makes you think the market will hold at all? I think the repositioning will be sufficient to drive improvement in the market price. How do you feel about DCA 923 2850 calls purchased today at the money? We saw some puts get shed earlier on GME as we started to cross above 2850. But I don't know how many yet, right? We need to see what the OI looks like tomorrow. They could have just bought right back in. Do you see SPY breaking 390? Yeah, I think it could. Am I the only one a bit disappointed today? I mean, you and me both. I think everyone's a bit disappointed. That's how it works. Yeah, I'm still going to wait on covered calls. Still hope for M, Upstart, and AMD. M less than the other two, but the calls were super cheap. AMD, if the market moves up, AMD will move up as well. And then Upstart, I have a lot of positions on. I'll probably average down my Octobers more, but it's getting close to the forced covering period for Reg Show. It's not running on Reg Show, which I don't like. I'm pretty bearish about that. But it's still got potential because of that. If it does make it through to forced covering. Thanks, Jason. What's the main reason you hold your Rev 35C? You expect another FTD spike or just long? Both. I think they'll spike again. And then also, yeah, I'm also just long. I mean, I own the stock too. I have a lot of shares of Revlon. As you said someday before, even if we hit 1 in 10 Opex, we make money. Yeah. Well, 1 in 10, you'd break even. SPX is kind of dying. Thoughts? I mean, it just fell back to 3,800. What do you got, Windmill? Did you kill it on the straddle? Oh, fuck yeah. Absolutely. That sounds awesome. think I make more if I just worked. This is work. Fubo stable. That's weird. High frequency trading, maybe? It's kind of what it looks like. We ran in May and we ran in August. Well, we didn't really run in August. We ran early in August. You mean on the 16th? That's true. Do you have a clip of the using options to build a position from the other day? I believe so. I think I got clipped or made into a video. Is Baba a good deal under 80 for shares and leaps? That'll depend on like the People's Bank of China decision later this week. If they're going to move forward with some kind of like stimulus, then yeah, it's a good time to buy Baba. But otherwise, risky. And they're still combating like a lot of issues with COVID. Ding ding. The day is done. Play Full Bear and let us mourn. Yeah, we could do that. Wait, no, I can't because I don't have the songs right now. I can't. Oh, wait, nope, I do have them. Never mind. There we go.
Red, I can be green, I can be
Well, that was a sad one.
I can be
What's Revlon doing in after hours?
I'll be anything I'd like. I can be red, I can be green, I can be violent downside. I can be bearish while your calls perish. I'll be anything I'd like. I can be red, I can be green, I can be violent downside. I can be bearish while your calls perish. I'll be anything
0.75 hike is the bullish one. I mean, it's better than the market crash that would have followed the 1.01. Give it time. There'll be more repositioning over the next few days. Just exited the straddle for a profit. Hopefully reposition the next few days. Thanks, dude. No problem, man. Congrats on that exit, by the way.
I can be red, I can be green, I can be violent downside. I can be bearish while your calls perish.
F in chat for Opex. And we'll see what happens tomorrow. There's always other stocks. I'll see you guys in the morning. Have a good night. I don't think we got fragged. We dropped $1. It's not like November and the price went down $30. Relax. See you tomorrow, guys.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
Mother said she found it in your closet.
I don't know. One of the guys must
have what?
Look, Dad, it's
Where did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico! Sit, Creon, sit. Good dog.
Hydrate!
Hydrate!
Did you get any of that?
It's a good show!
Not an advisor. Frigulond.